Good morning, traders. Welcome to NinjaTrader Live. I'm Maggie Lake. With me today, Senior Macro Strategist Craig Shapiro, Senior Economist Tracy Shuchart, and Senior Market Strategist Jim Cagnina. Good morning, everyone.
Good morning,
Good
panel.
morning, all.
Morning.
It seems, you just said it, Jim, seems like a little bit of a risk-off day. We have stock futures weaker, oil up on war jitters, and ahead of a CPI report due out later. But there are a lot of sort of different kinds of headlines flying around. Some of them are pretty interesting. Shai, what's on your radar? What's the news you're following this morning?
Well, the Strait is still closed. Day 73.
There's the banner.
All right. So shipping traffic in the Strait of Hormuz has remained at a standstill on Tuesday again, with oil prices rising after Donald Trump rejected Iran's latest offer and suggested the ceasefire may not hold. Speaking to reporters in the Oval Office, Trump called Iran's response to his proposal a, quote, piece of garbage, and said the ceasefire was on life support. The comments came as Trump prepares to meet Chinese President Xi in Beijing on Thursday. It's a high-stakes meeting that he will enter under economic and political strain at home. We also have Karg Island, which is Iran's major oil depot, is been on the longest stretch without loadings since the early days of the war. There's been no loadings from May 8th to 12th, so not even Iranian oil is getting through the strait right now. We had small business optimism tick up slightly to 95.9 versus 96.1 estimate, but 95.8 prior. The share of owners expecting better business conditions fell to 4%, fourth consecutive decline since the lowest in October 2024. That was on the data earlier this morning. We have Citigroup has reshuffled its near-term materials pecking order to put copper at the top, arguing mining equities have lagged underlying metal prices and are poised to catch up. Copper was upgraded to the top on its relative underperformance and prospect of de-escalation in the Middle East. That was followed by aluminum, lithium, LFP, cathode battery, gold, coal, steel, and cement. Moving on to private credit, we had PIMCO kind of scorning Apollo without actually naming Apollo. We had they were speaking, and what Karui said was that attempts to increase liquidity, the ability to buy or sell an asset quickly in size and at prices reflecting fundamental values, are welcome developments, yet until these efforts address the market's inherent structural constraints, including the lack of true price discovery, they will only increase the perception of liquidity without truly improving liquidity. As you know, Apollo has tried to add liquidity to its failing private fund. Moving on, we have Warsh clears its first in the series of Senate votes yesterday. Senate voted 49-44 on Monday evening to advance Warsh through the procedural obstacles, setting up a vote on Tuesday to confirm him to the board, and then a separate vote would have to confirm him to succeed Jerome Powell. And so they are trying to get this through by May 15th, because that's when technically Powell's chairmanship ends. As it was in Japan, and basically confirmed what we had thought, that Japan's finance team is coordinating closely with the U.S. Secretary Bessent on currency policy, and reaffirmed that they will continue to work closer on currencies in line with a joint statement they had issued. So, yes, the U.S. Treasury is kind of involved in that. It seems like they did make that market call on the yen before. So now we know that's settled. Trump froze the tariff rollback that he announced yesterday. He had announced the plan included cutting tariffs on imported beefs and relaxing regulations on American cattle producers. But apparently American cattle ranchers, which are a huge base for him, revolted on that. And so he is freezing that tariff rollback. Note on indices, breadth continued to deteriorate under the hood as indices screamed higher yesterday. And then, of course, we have CPI today. Now, they expect headline and CPI to both print hot. Obviously, the Iran war, which is pushing up gas prices and air travel, but rent inflation is also expected to see a one-off surge, roughly double the typical monthly pace as the BLS corrects for the shutdown-related distortions from last October. So we may get a hotter print than expected on the back of that data glitch happening, but we will see. We will cover it live. And last but not least, on data today, we have 8:15, we have the ADP weekly employment change, and then, of course, at 8:30, we have CPI, core CPI.
Yeah, a lot to get through. Craig, what are your thoughts on the risk-off mood? Is this just a sort of is it keyed off of what's happening with the faltering peace negotiations? Is it concerns about inflation? Is it just some digestion because we've had such a rocket run?
Yeah, I mean, I think you really have to squint in order to see the risk-off move, given how far we've traveled. But what I'm noticing today, I think, is part of the reason for some of the softness is the long bond globally is getting sold. It's kind of our one day a year where we start to worry about the UK gilt market, and so I'll reserve the right to talk about it for 30 seconds. Basically, the UK MPs are trying to figure out and trying to force Starmer out of office, and concerns about who goes in there next and what that's going to mean for future deficits and taxation in the UK. And so you're seeing gilt yields making 30-year highs. JGB yields are making new highs at the long end. German bond yields are making highs at the long end. 30-year yields in the U.S. are moving through 5%. We have a huge CPI print today, 10-year auction today, 30-year auction tomorrow. So, there's definitely some the scaries going on in the long end here. As we've talked about for quite some time, the call on capital is enormous. Fiscal deficits around the world continue to expand. The AI CapEx story is being increasingly debt financed. It's crowding out investment in other areas of the economy. And so we're having this pressure on the long run. At the same time, we have an important CPI print. Oil at the back end of the curve continues to kind of push up against highs. Inflation is going to be here for longer. So, in an economy and in a market where the bond market is this week, Deli texted me last night from the plane, said, I think the bond market's heavy, as he was trading at, E-minis on the phone, from the flight. But, it's noticeable now that the bond market is getting weak. And I think that has an implication for equities as we, given how far we've traveled.
Yeah, no, I think that's such a great comment. And Jim and I were geeking out on the UK gilt story right before we came on. And for me, it falls into the category of could it happen here, right? In this case, they're going up, unlike with Liz Truss, when they were just sort of voting with their feet against that government's policies. I think in this case, it's because they're worried Starmer, the UK prime minister, is going to leave and that sort of more left forces are going to take over. But either way, when you have political uncertainty and the market loses faith in what's going on and your ability to fix your finances, this is what happens. And I think this is what bond people worry about. Could it happen here in the U.S.? Jim, you were talking about the 30-year overnight, weren't you, here in the U.S., the U.S. 30?
Yeah, I mean, this is the second day in a row we're selling off. I mean, we're down a whole handle since the Sunday Open, and it's looking pretty. This time it's different. I feel like it is heavy, as Craig just mentioned. I'm not eager to just hit that buy button just yet. I would have been about 2 weeks ago, but not today. I want to see if this thing flushes out to a 111 handle right now, because this is kind of looking, everything's turning down, and I don't see anybody stepping in right now. My guess is some of this has to do with anticipation of CPI. It might be heavier than we think, and the bond market might be bracing itself for that. So we'll see. But everything's red across the board. Not usually red, but red across the board. And it's funny how these correlations on days like today just go 100% the same way, bucking the traditional correlations between asset classes. Even the Eurostock 50 and the DAX are down over 1%. So, they've been open for a while, and that's also telling part of the story. The only exception really is Dr. Copper, and I'll cover that in the Edge report. It's just been a crazy, crazy move up in Dr. Copper.
Yeah, it's since Jim brought that up, Shai, are we starting to see we all of the commodity folks that you talk to and the guests that you've had on have all kind of described what they feel like is this like air pocket that they just sense that there's shortages and trouble and disruptions that are going to take a long time, and it hasn't been reflected in the market. Are we starting to see that now? Is that the concern, that we're going to start to see some of those price pressures show up? Is that what's going on with some of these metals, or is that risk still floating out there?
No, absolutely. I mean, I think that we have serious underlying fundamental supply constraints in copper that's only supposed to grow, in silver, in platinum, and those, and a lot of those, particularly copper and silver, are tied to data center build out. And AI CapEx doesn't care about silver prices or copper prices. This is a race against China to, be the superpower in AI. And so they don't care what price is. They need these data centers built. Again, data centers, you need copper for cooling. You need copper, miles and miles and miles of copper just for one data center. You need silver for chips. And so they don't care what price it is. And even if, say, we were to go, have sort of a slight recession on the back of higher oil prices or whatnot, AI CapEx is still going. It doesn't care. And so that's where you kind of had the dichotomy, and that's pushing up prices right now.
Yeah, that's a really important distinction, because what we always hear is the cure for high prices is high prices, because you'll have demand destruction. But you're kind of laying out a scenario, Tracy, where they're price insensitive. They're just buyers whatever cost, because we're in an AI arms race. That's a very different kind of situation.
Yeah, 100% it is. And I wrote a whole Substack on it, if anybody wants to go look at it. But this is very different. That is going to be inflationary globally, right? Because it's not just AI data centers that need these metals. And so manufacturing and other sectors that need these metals are going to, have to buy these metals too. Electric vehicles, for example, they take 4 times the amount of copper than an ICE vehicle. So,
yeah, Craig, I guess that's why you do have some people really worried about the inflation outlook, but it hasn't really been scary yet in the numbers. CPI this month's data going to do that, or is that kind of further out, and we've got to reckon with the deflationary forces of that very same AI?
Yeah, look, I mean, the word. I used this word last week. Tracy just used it, bifurcated, right? We have a bifurcated economy where rates and commodity prices really have no impact on a portion of the economy that's related to AI, and a portion of the consumer that is very wealthy, right? Higher rates, higher oil, higher commodities really don't matter. And then you have another part of the economy where cost of capital is too high, cost of energy is too high, cost of goods is too high. That's for small business. That's for anything away from AI CapEx, and that's for the low-end consumer. And so you have this bifurcated economy that's running at 2 different speeds. And you're seeing that evince itself in the stock market dispersion, with AI CapEx names continuing to make highs, and many names in retail and travel and consumer related, have been incredibly weak. And so that's the economy that we're in. It's a particularly tough place for the Fed. Because they cut rates to help a low-end consumer. It's just going to exacerbate the inflationary concerns at the high end. And if they raise rates to tighten and slow down and lead to demand destruction, there's going to be more layoffs that come to the low-end consumer. So a pretty tough place for the Fed to be. As far as inflation today, the headline number at 0, expected at 0.6, that's down from 0.9% month on month last month. And so, but still, we're talking about headline inflation annualized above 7% year on year, and the numbers are incredibly high. The core number is expected to be, somewhere in the, 0.35%. So it could be 0.4, it could be 0.3, depending on rounding, because we're lapping some of the 6-month comps from when the government was shut down on the core numbers. And so, but look, a hot CPI print there I think is going to continue to add fuel to the fire on the bond market. And there's going to be concerns that this is not being addressed, that the economy is running too hot, and that the Fed and global central banks need to do something about it to arrest those concerns and actually need to tighten policy in order to slow down the AI trade, because potentially it's running away. And so it'll be interesting to see how this print is traded today.
Yeah, what are, Jim or Tracy, either of you can jump in on this. The expectations, it seems like the market has been increasingly pushing out any idea of easing by the Fed and feeling like this is going to be more hawkish, even though Warsh is coming in. Is that what the sentiment is? Or are they still holding on? I mean, someone in the chat just said, listen, none of this matters because it's all kind of manufactured by the Trump administration. I know there's deep distrust of the traditional models and correlation that we would have looked at. But is the market expecting
I've never seen the CME group. I've never seen the CME group FedWatch tool be unchanged for every single data point that they have going through December 2027. I mean, right? I wrote my morning note that, hey, we're probably not going to have a rate change during my lifetime at this point. That's how stagnant things are.
Yeah, that is kind of unusual. It's going to be it's going to be hard for Warsh to come in. I mean, he's going to make his stamp. He's in a. I mean, every Fed chair, it's the worst job. They're in a really tough position all the time because they've got a lot of masters they're serving. But it seems like there are a lot of expectations pinned on him, first and foremost by the Trump administration.
Well, yes, I mean, it's going to be very difficult for him. You have to remember, too, there are 12 FOMC members. So, it's not really up to him. It will be, can you kind of rally everybody to your side? Powell was very respected. We rarely had any dissents until just recently. And that's kind of a new phenomenon. I think that we'll probably see more dissents with Warsh because of the fact that the last statement where you had 3 dissents on the language of the particular statement, I think that's sending a message to Warsh that, we're not all a cohesive group here, and so don't expect to come in and this be kind of a cakewalk for you. So I think it's definitely going to be difficult, and I would not want to be Warsh after his first meeting when he is not able to cut rates.
He may not have to wait for the meeting to get the feedback. It might be right on True Social, just like his predecessor. Did we get ADP numbers? Somebody just put in the chat 33K. Yeah. Is that right?
Yep, 33K. Prior was 39. It's the weekly number. It's not going to move the market, but it's a decent number for sure.
I don't know. This is a bit of an odd story, but I'm going to throw it out there because in keeping with the could it happen here, overnight there was a lot of action in Korea off of a comment. Stocks were whipping around there off of a comment about a citizen's dividend for AI, trying to redistribute some of the AI gains to citizens, and stock market Kospi got freaked out, sold off, came back. But I thought that was so interesting because I don't know if that's just like another fancy word for, universal basic income, trying to figure out, Craig, to solve for that bifurcated economy.
I'm still waiting for my tariff check.
Yeah, that or that, right, Jim? Or that here.
Yeah. Look, I think this is an important story. We'll see if it really gets any traction. But if you think about the ways that we can kind of upset the AI CapEx train, one of them would be windfall profit taxes, right? Or the potential for, that these companies are earning supernormal profits and various governments are, want to get their piece of it. And, Andy Constant pointed out this morning that this is the type of headline we saw in the middle of 1987, kind of in the lead up to what happened later on that year, where there was, some talk about changes in legislation regarding LBOs and mergers. And so, again, these are types of things that kind of show up at closer to the tops of markets where governments realize, okay, things are getting frothy. How do we get our hands on some of that money? Right. And so here you have this AI story. You're going to have supernormal profits in many of these companies globally. and governments are going to be left holding the bag on all the labor that is being displaced by this AI story. How is it going to get funded? Eventually, it's going to get funded with taxes. And so, again, we're probably, quarters, if not years away from changes in legislation that, put some of the supernormal profits in the tech sector back into the government coffers. But those are the types of headlines. Those are the types of things that derail equity bull market stories when everyone's on one side of the boat. And so you saw that reaction in Korea last night. A decent reversal. We'll see if there's any follow through over the course of the next few days.
He did come back and say the president, South Korea's presidential policy chief, did come back and say it would be taxes that the government has collected from higher AI-related corporate revenues rather than a windfall on corporate profits. Now, he did say that after the market took a dive, so maybe he was trying to run
cover
some
my butt comment before I lose my job.
Some interference, correct.
They're also known as trial balloons, right? And I think that's such a great observation, Craig. That this is what happens when you're at the top, and if you're on a lopsided trade, where what could possibly stop this train, you get something like that. For me, it also underscores the political tension, right? You have, for the people who do not have those stocks, who are not participating in that, the populist trend that this is not working for me and I'm not getting anything from any of this. How do you appease that politically? I mean, we're heading into a midterm here. Now, this is far out, but these are the kinds of things that you could eventually start to see as again, that sort of, those two very different economies and that lived experience start to crash, and the people who are not getting anything from it, get their pitchforks. I mean, I think that's I think it is a story worth following. If you want to follow Andy Constant, by the way, folks, at Damped Spring.
Yeah, and
X.
And we're also, we're already seeing kind of the NIMBYism, right, for data centers in the U.S. Plenty of folks, it's politically don't want these to be built close to where they live. There's
Not
a lot of pushback
backyard,
already
folks.
at local level. Yeah, right. Already a lot of pushback at the local level from some of this momentum, and I think this is going to be a hot button issue into the midterms here. I think Democrats are going to really lean into this and try to push back against some of the momentum here. So again, lopsided trade where everyone's on board already, and these are the types of cracks in the story that are going to play out over the next months and quarters that start to, disrupt forward valuations and then maybe forward earnings momentum if government is going to come in and prevent some of these data centers getting built, or increasingly put more regulations on, or, put more taxes on them. And so those are the types of things that happen when you get, the boat loaded to one side.
Yeah, no, great observation. Really quickly, because we're just about to get to the, how's everyone feeling about the NASDAQ? I saw Dan Ives yesterday. NASDAQ's going to hit 30,000 this year, and Michael Burry saying it looks like the .com bust. Everyone, pick your side, I guess. Jim, what do you? Since you're just about to go for us, though, how you feeling about?
Yeah, I mean, this is so incredibly strong right now. No retracement in sight. Yeah, a little bit down today. But unless there's some consecutive down days here, I mean, there's a lot more upside, I think, in this until the bubble bursts. But I'm not sure there's a bubble. It's just really, really strong.
Yeah, hard to fight. All right, well, we're going to move beyond the NASDAQ and talk about some of the other movers. It's time for this morning's Edge Report. Take it away, Jim.
All right, let's finish the conversation with Treasury bonds. Right now, we're tracking 112 and 21/30. 2 days we sold off. We're below all the major moving averages right now, and we're kind of in the middle of that 112 handle. I'm no longer a buyer in the middle of the 112 handle. I want to see a dip down to this area of support, which is approximately 112.01, give or take a couple ticks either way, or a move back up to 113 before I'm ready. I don't want to be in the middle here. This is looking heavy. It's looking like, as Anthony suggested, it is looking heavy, and I'm not, we'll see what happens with the CPI print and then all the other stuff that's going on in the news cycle right now. But intraday, we have a little bit of a range, not much. Point of control is just right down, pretty dominant point of control actually at 21/30 in anticipation of CPI right now. Downside targets, Jax 1 at 112.16. That's going to be a big deal. This could be pivotal today. Candles below that could drive us a lot further down. So keep an eye on that Jax 1 level. On the upside, things turn around. High vol level, equally important. That's at 113 even. So let's keep an eye on that high vol level here once that number hits. Let's move over to copper. Copper is just an amazing story right now. It is just bucking the trend right now. A lot of the metals are down, not Dr. Copper. And let me pull up this daily candle chart right now. We took out the first swing high on January 30th. We took it out yesterday, easy peasy. Today, my next target here, that target wick way up there. I love these target wicks when you see them on a daily chart. 5-spot. I can't read it. 6-spot 583. So a lot of potential move up here. We're just up so much since this whole thing started here in Dr. Copper. This is a huge 4-day move up. Look at the moving averages; they're straight up. RSI rocketed to over 70 right now. It can stay there for a long time, so don't think this is overbought just yet. Intraday, kind of tight so far, kind of sideways actually. Not a lot of action. We kind of, let me get my charts fixed up here. We kind of saw a low here during the London initial balance. That's kind of where the low was set for this market. And then that kind of shot us back up a little bit. Really nice volume profile so far. We've kind of spent most of the day, though, most of the session so far, below that 0 DTE call resistance level, which is important to me. That suggests perhaps some more downside potential here. Jax 3 frames the bottom of the conversation. And then keep an eye on that 0 DTE put support 6.42. Even though we're kind of in a really strong bullish move, wouldn't be unusual to get a little bit of a pullback today on this. So this is copper. Sam in the chat wants to hear about the Bitcoin. Let's take a look. It wasn't on the agenda today, but Sam wants it. We're going to give it to him. Let's go to the Bitcoin right now. Surprisingly resilient, actually. We're right at that November 21st swing low. I kept that line on the chart because it was a really, really important level at 80,745. We're right at it right now, but it's really a sideways consolidation happening over the last 5 or 6 sessions right now, with the support being around 79,960, resistance starting up here around 82,260. No real trend so far. Even the moving averages are starting to go sideways a little bit here. And on the Bitcoin, we never made it back into that upward channel here, right? Momentum just kind of stopped, and then we have that 150-day simple coming down. So again, it's sideways. We'll see which way we break. Intraday. I kind of like this chart. I mean, we're below VWAP. We've been below VWAP most of the session. That's volume weighted average price for the session. You can see overnight we hit yesterday at the close. We hit some highs and sold off of that. Asian initial balance didn't help. The London initial balance didn't help. And so now we're kind of getting close to previous sessions lows at 85.05. Not particularly bullish right now, particularly given the fact that we have an awful lot of red on the screen across the board. Let's just hit E-mini S&P really quickly here, just to see what's cooking before we get to our economic release. Again, same thing as NASDAQ. I mean, it's not as exaggerated as NASDAQ, but it's just rolling, man. Moving averages are super, super strong right now. We're up still 16.7%. From those lows that we saw way back here on the 31st, and it's just driving pretty positively, up 7.38% over the year to date. And right now, kind of again a small case B volume profile. Keep an eye on Jax 1, 7,400. It's going to be important. 7,450, complete failure yesterday. We're way below that, and we're above that session VWAP here. So I'm a little bearish today on this market going forward here. And that is this morning's Edge Report. Back to the panel.
Thanks so much, Jim. The CPI data is going to come out in just a moment. Shai's going to bring it to us when it crosses. I just some great comments in the chat I have to read. Jim is for the people, GOAT, and someone else calling you the people's champ, Jim. So we may have to get
the
those,
traders. Let's go, traders.
Let's go. We may have to get those name tag for you for the next in-person meetup that says all of those things, and you can meet the people who actually said them. It's fantastic stuff. Also, we have a contest going. I know we have CPI coming out, but since we have such good vibes in the chat, we've got another swag giveaway, right, Jim? Wheel of Futures.
Wheel of Futures. Yeah, we had a lot of fun with it yesterday. We're doing it again today in the morning session. We need 400 likes to spin that wheel, or 1,200 viewers to spin the wheel. Put your name in. We're going to have that link in the chat. Go ahead and put it in. We're going to pick one winner, at random. We're going to post it on the screen, and then we're going to spin the wheel, and you're going to get one of these amazing prizes: t-shirt, hoodie, hat, sticker pack, or 1-ounce NinjaTrader silver coin. And you got to be there to win. So if you put your name in, we pull your name out of the hat and spin it. You got 60 seconds to say, I am here. So
Yeah,
it's a lot
some
of fun.
people weren't yesterday, but 3
Right.
people got hoodies, and somebody got a
Silver
silver
coin.
coin, folks.
Yeah.
So come on, let's go. Real stuff at stake, as they say.
Yeah.
Okay, back to business. And we are going to wait for that inflation read. And Anthony is in the chat. Hi, Deli. He's saying, thanks, Jim, for talking about bonds, the most important thing for him right now.
Yeah.
And also, Tracy, giving you some credit for the great flag on copper. Got to listen to Tracy if you want to stay ahead
Something's
of
going
things.
down. Something's going down.
Okay.
CPI came in as expected, 0.6%. Core month over month, hotter than expected, 0.4%. Year over year, hotter than expected for core, also at 2.8%. And CPI also hotter than expected at 3.8%. So hotter print than expected is the gist of that.
Yeah, I mean, and bonds are still selling off right now on that news. They have been the last couple of days, so we'll see how far they go.
Yeah, I mean, this is Craig, I know you. I'm remembering you talking about the fact that we need pretty heavy news to move stocks off that, based on some of the things that are going on under the hood with expirations. Again, does it feel like this has the ability to gain some momentum if bonds start to act badly, or is this just some people taking some money off the table and taking a breather?
I can't hear you.
Yeah, we lost.
Sorry, this is not a great inflation print. A little hotter than expected, but you're right. I mean, we're in a positive gamma regime still. Dealers are buying the dips to address their positioning. It's expiry week, and so you need kind of a crescendo of continued negative news to really disrupt the tape here. Obviously, we can have a little bit of a sell-off after we've had such strength, but down 35 handles for the S&P, now 50 basis points, really nothing to write home about yet. But look, I think the bond market today, we talked about it at the onset, Deli mentioned it in the chat, Jim mentioning in the Edge report, it's clearly top of mind for all of us today here with the moving gilt yields, JGBs, boons, and now 30 years, hotter than expected inflation print. So keep an eye on bonds all day. And if that's the type of thing that could lead to that 1 + 1 + 1 = 10 type market dynamics. But don't expect to see a cascading crash in equities today, given that supportive dealer positioning. But it is a reminder that as we push through the week, we're going to start to lose some of that supported flow. And so next week, with the window of potential weakness reopened again, we open up the opportunity for the news bar to be lowered and for markets to trade a little bit truer as we push through. The other important thing to note is the president is going to China. I think he's leaving this evening. He has meetings tomorrow night tomorrow night U.S. time, Thursday morning China time. So by the end of the week, he will be gone. So Friday actually becomes a little bit more of a live day here because we will know kind of what happened between Xi and Trump in China and whether or not attacks in Iran are going to resume for the weekend. So expect the potential for the weekend scaries to open up again, because there's been plenty of people who have been thinking that the president wouldn't make a move on Iran prior to going to China. Well, he's going to be gone from China come Friday, and kind of leaves the door open for the weekend at this moment in time when we lose all that supportive positioning. So again, pushing through the week, you think about hedges, volatility remains compressed, inflation fears are there, oil is still elevated, bonds are pushing through 5%. The backdrop is not, will not be as supportive as time goes on.
And can I just add one thing about bonds?
Please.
I think we really need to look at the velocity of the move too. So we had a big down day yesterday, big day this week. So to me, if the bond market inches down, that probably has less of an effect than if we see, some real movement to the downside. I think that has the ability to affect the markets even more so than the actual move.
Yeah,
you're right.
There's still this notion of a carry trade too with the 30-year bond. I mean, you could borrow yen at less than 1%, lock in 5% for now, and then later we get some bond appreciation should things change. So I think that's a real hedge funds phenomenon, I think, going on right now.
All great points. This is a great question, and I think it's an important one once in a while to stop. Uh, any of you can jump in, but Craig, I'm gonna sort of direct it to you, I think. Could you explain why bonds are so important for the equity markets?
Yeah, look, I mean, there's a couple. I guess a couple things come to mind. Just the relative, asset class returns between bonds and stocks, right? And so as yields move higher, it's particularly for U.S. Treasuries, kind of through 5%. This has typically been a place where folks have stepped in and said, "I'll take that risk." Government always paying me back at 10-year yields are 4.4% and 30-year yields at 5%. More importantly, though, with respect to multiples on the equity market, as interest rates rise, multiples compress. And so you have this dynamic in play where the relative value of equities is reduced as interest rates are moving higher. And then lastly, there's an earnings story too with respect to higher yields. Higher borrowing costs for corporates will dampen profitability. And so on the margin, a higher and rising interest rate environment becomes less conducive for equities to move higher. And so you get some of the shifting of portfolios back out of equities into bonds when yields move higher like that.
Yeah, thanks for that question, though. It's a good one because sometimes we run through this stuff, and we don't, it's good to connect the dots back sometimes. Also, this. And it's kind of been 5% seems to be the pain point. But, when you see, and this is to Tracy's point about velocity, when you see things moving quickly, it's also sometimes a sign that things are breaking somewhere, that there is concern. And so people look at it as sort of a fire alarm in a way. We know who does as well, the government. I mean, people have made this point that every time the bond yields start to really take off, that's when Trump changes his tune or they come out and start to manage things because they do not want to see that happen. And I think you're right, Craig. This is going to be potentially a really important meeting, although I'm not sure we're going to hear about it, right? There were some great tweets out saying, let me guess, we had a really good meeting. China wants to do business with the U.S. Everything's great. Thank you for your attention to this matter. Like it's gonna be a lot of that, and then we won't really find out what was discussed until potentially much later. Hey, Shai, we didn't talk about oil today because there's so much going on. We should take a look at that because that's been marching higher. That's also part of maybe what's contributing to the tone today.
Well, yeah, absolutely. Of course, there is pressure on that market since a ceasefire deal didn't happen. That said, Trump still hasn't chosen yet to re-escalate this war. He's thrown out there that, we might, put Project Freedom back on, but that hasn't happened. And so far, it's a lot of threats, but he really hasn't done anything yet, and he's had plenty of opportunities to escalate this war, but he's chosen not to. So it's a lot of words right now, but still, and the oil market is reacting to that. But I keep going back to the fact that we have a fundamental supply issue that I think this market has been disregarding with the amount of oil that is not moving and the amount of production that is currently offline and how fast stocks are draining, particularly in the U.S., as we are kind of the seller of last resort if you can't get light crude from the Middle East. And so we're hitting sort of an inflection point that, we're essentially losing 100 million barrels per day right now in stocks, in global stocks. So the longer this lasts, the more pain that's going to be felt later on, unfortunately.
Yeah, no, I mean, this chart does not look anything but bullish right now, long term. I mean, we have a swing low that we had here in the middle of April, higher swing low that we had at the beginning of May, and then some continuation buying, a lot of support right at $95. So this is looking pretty strong right now.
Yeah, and that's the phrase you hear a lot, higher for longer. How high, I think, is an open question, given the dynamics that Tracy has been underscoring. And, read her Substack and listen to what she's saying. I love when you have another oil expert on and the two of you are just, it's like disbelief on their face, including the guest we had on Monday. Just like we see these disruptions and it's not really reflected in, they just can't sort of wrap their head around why exactly. But it's at some point, that's the worry, I guess, that it's absolutely going to hit and it's going to be a major problem.
Yeah, and again, I want to stress that we did have sort of a buffer. We had a lot of global floating storage that is now drained from the market. We had excess, we had 400 million barrels at a joint IEA coordinated release. Everybody's pretty much released all of theirs. U.S. had the most at 125 million barrels. We're still eking that out. But those cushions are dwindling and very quickly. Now, China also pulled back on buying 5.5 million barrels a day in the month of April. That also helped cushion the blow for prices moving higher as they dug into their stocks. But they have over 1 billion barrels worth of SPR. And so does that continue? Do they continue not to buy? We don't know. And is 5.5 million barrels a day really that big of a deal? And this, 105 million barrels a day globally changing hands, we'll have to see.
Yeah, they were ready. You have to say that they've been preparing for something. Such a nice comment. If I from one of the folks in the chat, I feel like if I was Dorothy's house, I landed directly in front of the Emerald City. That's so nice. I know there's a lot of love in the chat today. We love it too.
So on a follow-up note to that, though, I mean, if you look at RBOB gasoline right now, the chart looks a lot different than the crude oil chart. This is just another one of these almost exponential rocket ships up on a weekly chart ever since the war started. And, this is what matters to us, right? This is gasoline. RBOB futures are futures on gasoline. And we're just making, we're just going to have another, I don't know if it's an all-time high, but a long-term high in this contract at $3.68.
Yeah. Nat gas was moving this week too, I think, wasn't it? I think so. While we look at that, Tracy, do you want to talk, when we see these metals move like this, and I know Deli was talking about you flagging copper, and Jim did it in the Edge report, we talked about it. Sometimes these things, does it feel like this is going to be one of these parabolic moves? Because that's what we've been seeing in metals. When they start moving, they really take off. And what do people need to know about that and be cautious of? Because if it goes up like that, I'm assuming we have to watch on the downside.
Yeah, absolutely. I mean, copper prices are above $6 now. I think they should. I think they will be higher. I don't think you're going to have like the silver squeeze and the gold squeeze that we had in the copper market, because it's a very different kind of market and it's traded very differently, because it is really just an industrial metal, not a precious metal. Well, silver is a dual purpose, industrial and precious metal. But I don't think we're going to see a squeeze in the copper market like that. We've had instances before. We've had mislocations of where copper is being stored, and we've seen kind of that market spike. But it doesn't really behave exactly the way gold and silver do. So I don't think that we're kind of going to get a copper squeeze, so to speak. But I do think prices have higher to go for certain.
It's going to be, it's going to be something to watch. Do we feel like silver, a few weeks ago, I know Jack's been in the gold trade. We're going to talk to him about that in a minute, but it felt like people were looking for it to roll over. And then we sort of, now what is the setup? Or do we think it's going to move higher with the rest of the metals? Or
I know we're day traders here, but sometimes you got to take a step back and look at a weekly chart. And when you see a weekly chart in silver, I mean, you could see this 8-week succession, just a grind up again, right? It's not so explosive as it was the first time around, but it is a grind back up to the highs, and it's the trend is very, very bullish right now in silver.
Craig, any last thoughts from you before we wrap up in terms of it sounds like we're going to be dodging, and certainly potential for headline risk if we've got this big summit coming. But what are you going to be paying attention to? Is your focus on bonds?
Yeah, look, these are, this is the headline right before the approval rating has surged to 70% in a new CNN poll signaling deep voter concern over economic conditions. And then we get the inflation report, which is the highest level in 3 the cost for Americans. And so, look, we have this dichotomy here, right? The polling data is terrible. Inflation is becoming a kitchen table issue. Those are the types of headlines that you get on the cover of, USA Today that regular Americans are reading and living and breathing. And so the president's going to have to figure out a way to address that. Otherwise, Republicans are going to get steamrolled in November. And so as far as bonds are concerned, this core CPI print here, 0.38% is the second highest we've had in the last 2 years. Super core up 0.45% month on month is similarly, one of the largest readings we've had in 2 years. And so core prices, even away from energy, continue to move higher. It's a growing concern. Bonds are picking up notice of it. Positive gamma week makes it harder to see the tape, crack in a big way. But we're starting to see some of the cracks maybe developing here. And as we push through the week, if these concerns aren't addressed, the back half of May could be a lot more difficult.
All right, we consider ourselves warned. Thanks so much, panel. Appreciate it. Great morning. We'll see you all in the chat.
Thank you, Meg.
All right, let's take a look at who is on the lineup today. TTrades is here for Tape Talk. Jump in the chat. I know you're already chatting with him, but let him know what you want to look at. Merritt, Black, and Chris will be here to trade the open. We've got Nick for a tick and Jack for midday markets, and trading the close will be XY, Salma, Kane, and Leo. Quadruple superstar lineup for the close. All right, let's bring in TTrades for Tape Talk. This portion of the stream is sponsored by the CME Group, where risk meets opportunity. Good morning, T.
Good morning.
What are you
How
watching
are
today?
Not quite a bit. It's quite interesting the last week, and then this week is also with some good news events and some movement.
Yeah, some movement, which is always good. So walk us through some of your setups. I know people are asking some questions already, and you've been in the chat with them. So just walk us through your setup for today.
Yeah, if you guys want me to look at anything, just put it in the chat. But besides that, we'll start out with gold here. Excuse me. But we spoke last week about gold and that taking out its previous month's low here. And so with that taking out the previous month's low, did we get a reversal? We got a reversal. I was looking for, 4,800, as my first target. We're pretty close to that. But if you take a look, silver had the strength and ran straight through its previous month's high. And so that's the one that actually had the strength there, silver, with a pretty nice move. We've overextended that move, so I'm looking for some sort of retracement here, a new swing to be put in, and then I do want to see this trend continue. So I'm just looking for a continuation of this trend this week. Ideally, the low formed Tuesday or Wednesday, then get a continuation higher. I want to see silver continue, and then I also want to see gold also continue into its previous month's high. So I'm pretty bullish on metals. As I spoke about last week, start of the month we form a low. That is good. We can just continue this trend into, the third, fourth week of the month.
All right. I know we have a lot of people now starting to look at that because of the moves we saw. What are you looking at elsewhere?
We can take a look at indices. So indices we spoke about last week as well, where we were looking for, a focus on the S&P forming a low here and then trending higher. That's what I was looking for. So we have this trend. We've made a trend at the start of the month. I'm looking for this week to consolidate or retrace. So I'm looking for a move back across the range. And by range, I'm just meaning this candle here, viewing this as a little range. Just because normally when we start out a month, if we're going to trade it higher, we want to see a small move lower and then a trend. I think we're a bit overextended and needing a pullback here on the indices. So I'm just looking for either a consolidation or a retracement into this week, just because we opened up the month and just went straight higher first. So I'm looking for some sort of retracement or some sort of consolidation. And then after that, I'll see how price is reacting to determine if I want to see a move higher or for that consolidation to leave us, into a reversal.
Yeah. When you're looking for that, what kind of downside if we see a reversal? What levels are you watching?
If we do get in a reversal, I would just be looking back towards the monthly open at 2,700 or 27,630, just back to the monthly open. And that's just because if we open up this monthly candle in reverse, that becomes my target. So if we do reverse, I'm just looking for that, which is, a 5% move, which I think is reasonable given the move up we have had. If we zoom out a little, we have a move up of, almost 30% from the highs. I don't think a 5% retracement is that unreasonable for a week.
Yeah. I know some people would actually like to see some consolidation. They get a little bit worried if it just rockets up in one direction without any kind of digestion. We have some people asking, I'm just going to throw out and you tell me what you want to look at. Folks asking about DXY too. Dixie, are you watching
Yeah,
the
we can
dollar?
look at dollar. So I was looking initially yesterday for dollar to go take out this range low because we spoke about it last week as well. Dollar is pretty much ranging in this area. We did get a reversal off of this previous high and made a move lower, but we're still in this range. And so dollar is not that interesting to me, or foreign currencies are not interesting to me until we take out one side of this range. So I don't like to trade inside of consolidation. I just wait for the externals low or the high to be taken out in a consolidation. That doesn't mean you can't find trades on foreign currencies. It's just a bit more difficult without a good direction in the dollar for me to anticipate.
Yeah. Are you, and so you feel the same way about the euro? Somebody said GU too. I'm not sure what
Yeah,
they're talking about.
so euro, I would say if you want to look at something, the GBP is a bit better today.
Hmm.
It just did have a reversal yesterday. So if you look at yesterday, it did form a reversal. And then today we got this continuation. But the thing is, unless you got on side with that trade overnight, there's nothing to do here, right? Because this move has already expanded. It already took out all these lows previous, made a new monthly or current month low. And so this would be entering short at the bottom of the range, which is not what I want to do. And so this would just be waiting for the next day for me. So there's nothing to do for me within Forex currently. Someone said JPY. Well, taking a look at the yen, it's also just kind of in this range, but it took out this high in this range. So what could we look for? Go to this low. So I would just be looking for yen to get a continuation into this low. Can you get on side with that? That's up to you. I personally don't have enough confidence in this bias to look for something in there within the yen because I need a dollar bias first to go look at foreign currencies.
Oh, that's interesting. Yeah, dollar leads. When you're talking about the yen, there's always that risk of intervention. What do you do? Do you just make sure that how do you deal with that when it's sort of the same thing as headline risk, right? But in this
I
case, we
mean, you
know.
just got to have a stop loss. I mean, that's really all you can do. You can't predict news. So as long as you have a stop loss going into a trade, it's like if something comes out and you get stopped out, well, that's why you have a stop loss.
Yeah. Peter agrees with you. Dixie is a coma trade right
Yeah.
now, which makes it tough. I know. We also had a question about Bitcoin.
Yeah, we can take a look at Bitcoin. Um, I was looking at it here. We did get a little, it's similar to indices. It's actually now tracking. It wasn't previously, but you can see start of the month, we just trade higher. So I'm looking for this trend to continue. If we are going to continue, let me mark this up. I'm considering this right here, this low. This should hold if we're going to get a continuation of this trend, right? And all that is a low, high, higher low. Are we going to go make a higher high? If we don't respect this level here, so if we get a daily close below this level, then I'd just be looking for this trend to either switch or just at least take out this low. So I'm more so looking, does this area hold? What is that? That's right around 8,700. If that area holds, then we can get a trend higher back into a new high around 83K. If that doesn't hold, we get a daily close below that, then I'll be looking back towards, below 80K.
Mm. Uh, we had Delhi in the chat earlier talking about bonds. He just feels like bonds are the most important trade right now for him.
Yeah, I don't look at bonds a whole lot, just because I find if I look at too much intermarket analysis, I confuse myself with my own entries. So once again, though, as we spoke about it, this is a consolidation high, consolidation low. The only way I'm framing this is, are we more likely to reach for this low or for this high? Well, just given the distance, it's a lot further from this high than it is to this low. So I'd just be looking for bonds to trade into this low here. Now, I know we spoke about gold with bonds and how they trade similarly in certain cases. I personally don't really look too much at that correlation, so I'm just looking for bonds to trade into this low here.
Mm. I asked the panel earlier, but I'll sort of put it to you, and I can't remember if you had NQ or ES up earlier when you were talking about the consolidation, but we have so many people weighing in and saying, "Oh, this can run." There's so much more upside. I think in the sort of regular Nasdaq, Dan Niles is saying 30,000 easily by the end of the year, and then you have other people like Michael Burry saying this seems like a bubble, and this is gonna. What do your charts tell you? How are you feeling about NQ?
I mean, I was quite bullish back at this low I talked about it with Deli on this Tuesday here. You guys can go rewatch that if you want. But then I was bullish pretty much this whole month. There was one day I was bearish in here. But then I'm just looking for a continuation. My thing is I don't like to fight the trend. I only trade continuations. And I've learned from previous years what's high can go higher. So I don't like to try to pick a top. That's not for me. There's certain days where I see that it's extended and I can trade an intraday reversal, but I'm not trying to pick a long-term high expecting, this to just go trade lower and then catch this massive move. I'm betting long generally on the markets. And so if I'm trying to trade intraday, I do prefer short just to hedge that. But I don't really have too much anticipation. I just go day by day. And then I can look at the monthly candle, right? So this is obviously bullish. If I have a formation that tells me it's bearish, well, then I can switch it until it's bullish again. I don't really predict too much. I just kind of react to what the market is telling me and then make decisions based off of that.
Good advice, because it's hard when you see those headlines and you have an emotional reaction to it. I think we all can kind of easily get caught up in that. But that's, I think, really wise. Let's see if we have anything else in the chat.
We can go take a look at oil. So I spoke about this previous week as well.
Yep.
We were right here. And this is kind of what I mean is I spoke about being bearish into this level here, and we actually got quite a move on Wednesday, even down into this level. So for me, I was looking to see, could we break this 90 level? And that's just this level right here, right around 90. If we could go break this level, I was looking for some downside. Due to the fact that we could not go break below that level or close below it, it's just more of a consolidation or a move back higher. Now, if I wanted to focus on something bullish within the energy sector, I'm going to be more focused on gas or diesel, just because they are quite bullish in comparison, probably just focusing on gas, looking for it to trade into a new high. This is a lot more bullish within a trend, right? Look at the trend here. We make a high, higher low, looking for a higher high, while oil is just kind of consolidating. So if I wanted to focus on something, I'd be focused on gasoline this week.
Fantastic. What do you feel is that what you feel most convicted about, Tay?
Honestly, I would be most convicted on a bearish day on indices. That's what I was looking for yesterday, or like this. I'm looking for more bearishness in the indices, mid this week, just because we're getting into the middle of the month and I want to see some sort of retracement or consolidation opposing the move. I am quite bullish on energy, or not energy, metals. However, we already got that expansion. So I'm just looking to see, it's going to be more so of a midweek, Wednesday, do we form a low on these metals that I can trade again higher? Or you can focus on energy. Nothing's like super obvious to me, but we'll just see how the daily closures tell me what to do.
Shai is saying 100% on RBOB. She's with you, TTrades, on that one. And Kindurkin saying, have your stop set today. Trump is talking 3 times and reports are coming out. So to your point about sort of being prepared to try to dodge the headlines that are with us, I think it's really, really useful. Any parting advice for folks as they sort of navigate through this day, given the fact that we're potentially going to be all focused on Truth Social?
I mean, I don't really look at too much at like headlines or news personally, because I find that the chart tells me what's happening a lot of the time. But you just have to decide a bias and then either stick with that, or if price invalidates the bias, then you can switch it. I don't have too much going on here. I was bearish, but if you notice, we already took out this low. So I'm just looking, do we get a move back higher or do we form another continuation lower? So for indices, I'm just looking, do we form a higher low to trade lower, or do we not and trade back up higher? It's pretty much more of a reaction game for me today. That's why it's not super clear. Luckily, I'm flying today, so I'm not going to be trading anyways. And see how the daily candle closes, then I can use that information for the next day.
Sometimes watching and waiting is the way to go. T-Trades, appreciate it. Good luck to you today.
Yeah, thank you. Thanks for having me on.
Just a quick reminder, everybody, before we get to the open, I see some of you talking about it in the chat. It's Wheel of Futures. It's happening again today. If you missed it yesterday, 3 lucky people scored some hoodies. I know you're all tweeting about that and posting about that in the chat. And someone got a silver coin as well. So let's get to it. They're going to be spinning it. Remember, you have to hit certain streams. You have to be in the chat and you have to hit certain milestones. 400 likes or 1,200 views. They'll spin the wheel, figure out the prize, and you've got to be in the chat at the time they put your name up, or they're going to have to redraw. So get going. Get your friends in here so somebody can win something. we need it to help offset what might be a little bit of difficult mojo. We've got bonds in focus. Delhi's watching them. They're under pressure a little bit. Hotter than expected reading on CPI, putting a little pressure on things. We're going to be watching and dodging headlines coming from Trump's summit with Chinese President Xi. That's in focus. And we're watching metals, which are on the move. You heard T-Trade say, and energy. All of those seem to be ripping. So that seems to be where the action is. Okay. Up next, we've got Trade the Open with Merritt and Chris. Hello, gentlemen. How's it going today?
Hey, good morning, Maggie.
How are you?
Morning,
I'm
Chris.
doing well. How are you? Are you guys ready for today? What are you watching?
Yeah.
What are you
I
watching,
am.
Chris?
I'm watching the NASDAQ.
Nice.
You?
I'm flipping around, man. There's some choices and options out there today. Metals, indices, cocoa and orange juice.
Cocoa and
Usual.
orange juice.
The usual.
So there's someone who's consistently in the chat watching cocoa. I can't remember who it is, but we've got a cocoa fan who may be chatting with you
Nice.
Merritt. Chris, are you looking for consolidation for NASDAQ? Are you playing the downside? Or are you looking for, you think it's going to sort of find its footing and make another run?
Yeah, we can see consolidation. I've just been buying pullbacks and support. Like I'm long right now on this morning's pullback. So I can share my plan here.
Well, I'm gonna get out of the way and you can do that because I'm sure
Okay.
folks are gonna have a lot of questions. But have a fantastic day and good luck to both of you.
All right,
Tell your
Maggie,
husband I
take
said
care.
hello.
I will, Merritt. Thanks.
See you.
What are you doing over there? Getting brownie points?
I like her husband. He's a hunter.
All right.
No,
Morning,
he
chat.
was
How's
fun to
everybody
hang out with.
doing?
Morning, chat. Yes, Jim. The beard is removed. It was just a stick on. It was a little fake. It was a fake beard. Okay, chat, you got it out of me. It was fake. I took it off, and here we are.
So that's what that smell was in Miami.
The glue for my
Oh.
fake beard.
I don't know, the hair or the glue, maybe combined. And the weather, it's not a good look. All right, guys, let me
I don't
share
think
my
I've ever had a
NQ
good look.
plan here. Since I'm already
Yeah, what's the
long.
plan? Walk us through it.
It's you see weakness, buy it. That's the plan.
You know, I don't get the bearishness, man. To me, this is a prime spot. Look, obviously we're on a tear, right? Things are through the roof, but if it's going to continue the trend, the buyers just stepped in from where they should have.
Yeah.
What do you think?
So we came down into a good zone here that I like, the 29,100 area. And I was looking for a bounce either there or a little bit lower into the 60s area, but we took out London low. We had some divergences pop up at the same time as the hourly was oversold. So that's my usual combination. And so scenario one was that look for some weakness here into London low or the 29,060 zone here that I have, and look for the trend to be completed from the failed breakout that we had yesterday. If you guys see here, we have a lower low, lower high, second lower low, second lower high, and then third and final lower low, which if you guys recall, the third lower low or third high in a trend completes the move. So as you combine that end of structure, the end of the trend structure into a support area with divergences, you can start putting things together to, it's a good recipe for a reversal. We're seeing that now. Scenario one here is to see a bounce back to prior day low, London high, maybe this consolidation back test. And, maybe we can reject and we can consolidate like, many people think as we let the moving averages move up on the daily time frame. However, if we do hold that up here, we form some acceptance, and I don't see where we can't, again, push back up into prior week high, this 360, 400 area. But we do need to reclaim this sort of London high and form some acceptance here. If we do see lower then we will move below the current low. And I have two support levels here around 900, 940s, which is a prior swing high. And then eventually the full back test of this consolidation from a couple of days ago would be around 750s to 800, which would be to me like the main daily support where we could see like not a significant, but like that's a really good support area for a much larger bounce. But for now, I am just focused on trading pullbacks into support. For me, no need to overcomplicate it. What about for you?
NASDAQ over under the current low. That's where it was a very reasonable place for it to respond on my charts. And so if that holds, take out the 29,500, and if it breaks down, that's more interesting, right? Because that's a as Tristan likes to say, a change in character. And I would look at all kinds of downside targets, namely kind of 28,000 for starters. But bullish until proven otherwise. That reaction from the low in the S&P, if I kind of focus more on that market, which is the one I tend to look at, it's from last week's value. It's buyers responded. You look at the delta, look at how they changed. It was kind of a super lack of selling into the low, very, very quiet sideways delta. You see this capitulatory selling, and then the whoop-de-doop-de reversal, and buyers are in control, and the low's a good low, and bullish until proven otherwise from right there, from right there.
Question for you. I could have just texted you this, but since we're both on now, do you also look at extensions for your, aggressive swings that you look at near the bottoms? Are you also doing the opposite at highs?
Extensions? Like, do I use like fib extensions?
Sure, that, or I don't think you do that, but like maybe yearly, whatever I think you call it, yearly bands or yearly VWAP, right? Like, because I know you're buying those lows where people are scared. Do you also do the same at highs?
Yes, but I don't just, I know it might seem like it sometimes, but it's super, super rare for me to, across all time frames, just try to catch that falling knife, or, whether it's a long or a short. Sometimes, like this past time where I caught literally, the low.
Yeah.
That was because it was an order flow sequence that gave me access to such. Most times I'm looking kind of like a lot of people, right? I'm looking for, okay, like for example, right here, right now, we'll talk hard right edge, big picture. Market has been ripping higher since, the lows at the start of April or at the end of March, whatever it was. I will look for it to start to crack, start to change. For example, on this chart up here on the top left, well, you guys can't see it right now, but I'll look for it to start to change from being in something of an imbalance up or a trend. I'll look for it to start to change. And for example, look at the volume from last week. Okay, we could kind of highlight this region. From here to, we could do, you got some choices as to where you want to put the lower edge of that node. I'm going to put it right here. So, if we continue to hold inside this balance, right? So this is kind of a different view than the kind of the one I'm leaning on. in terms of this being the bullish inflection. This is resistance right here into 74.20s. If we fail at 74.20s and there's a big shift on the tape and the sellers are in control and we go imbalance down intraday today and we start holding below this general 7,400 level, that's confirmation within the context. Let's not forget we're way extended, way up.
Yeah.
If that starts to happen, that's where I say, hey, we're really, really extended on the daily. There's a ton of room for pullback. But you see how I use a lower time frame to get that confirmation of a shift happening rather than just trying to catch that fallen knife or be a firefighter or whatever term you like to use.
All right. Thank you.
So you're in a position here, right?
Yeah.
Okay. Oh, you got like a break-even stop. You're in off that reversal off the low. Nice.
Yeah.
That's cool.
Already partialed out.
Sure.
And then I'm just sitting on the rest. Let's see. We need to reclaim this prior day low if we are to push out to seek a lower high, an hourly lower high against the prior day high. We shall see. Good morning, chat. Morning, everybody.
What did you pick in the poll, Chris? What did you pick?
What did I pick? You mean like I don't get
In the poll,
I don't get
in the stream.
Yeah, but I don't get. You're saying what price did I pick?
No, bro, the poll. What should we name the new NinjaTrader Live pre-market newsletter? And there's 3 choices.
I don't see that.
The poll.
I don't see the poll. Why are you yelling at me? I don't see the poll.
NinjaTrader's yelling. Look, they're yelling in the chat. Everyone's yelling.
I don't see a poll here. I only see the wheel.
Okay, I'll do as you so often do for me. I'll read it for you. So what do you like between the daily doji, wake the tape, or the first print?
Deli's like, come on, read the poll.
What's in the poll, man? What's in the poll? My vote was the daily doji. I think that's fantastic.
The daily doji?
The daily doji.
That can mean so many things. Like, are we at resistance? Are we at support? Like, what's going on?
Dojis are neutral, bro.
Yeah, at support or resistance.
You're trying to layer in context to the poll. Take it at face value, man.
I like the morning wake and bake. Oh, is that not an option?
Wake the tape.
Oh, they said wake and bake.
No, wake the tape.
God, okay. Not that one.
Print. I mean, they're all pretty good. Shake and bake.
The good old shake and bake. Wake and
shake
bake.
And
bake. Oh man.
What's that? What's the sidekicks? What's that actor's name? You've got Will Ferrell, and then what's the other
guy?
John C. Reilly. Thank you. Shake and bake. Talk about a quotable movie. My goodness. I got to watch that. It's been a long time since I've seen Talladega Nights. That's going on the list. You know what I'm watching right now? Guys, if you're American, this is incredible. You got to watch this. It's the Ken Burns documentary on the Civil War. Absolutely incredible, man. I just finished the third episode. I think it's like a 9-part series. What a time! My goodness, incredible. And how eloquent people were back then. How they spoke, how they wrote letters. Absolutely incredible. I purchased it, I think, off Amazon Prime. It's like a PBS um, um, series. But I mean, Ken Burns is, I mean, he's one of the best, I think, the best documentary folks to ever live. Anyways, super cool. Highly recommend.
I like the morning print.
The morning print. Okay. But that's not an option, Chris.
Oh,
Chris.
the morning gap. What? The first print. The first print.
I need, speaking of sidekicks, I need a new sidekick for this stream.
I'm Robin, you're Robin. Okay, what are you talking about? They're here for me. Excuse you?
Oh, man. Mm, 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 mm.
All right, guys. Don't forget that at 400 likes, we will be giving away. uh, at 400 likes, we will be giving away something fun. And Mary will let you know what that will be.
Yeah, because I can read the polls.
Well, I missed out on a lot of ESL classes. Okay, so
You probably had better English education than I did.
I don't think so.
You sure about that?
All right, looks like we're finding some resistance here at prior day low in NQ. Unable to reclaim, which is also the back test of the breakdown, so it makes sense. And if we are to go lower for a new low, then we will look at supports lower for another buy. But we are still in an uptrend, guys. So much needs to happen for this uptrend to fail.
Yeah, RC Watt. That's on my list too. And in fact, he just came out with a new one on the Revolutionary War as well. I'm gonna be binging the documentaries for the foreseeable future, if I can ever find time to watch them. All right, as expected, seeing something of a pullback here after the response off the lows. We still have 12 minutes till the open. Merritt, how many hours do you spend out of the screen during the weekends? But then it says journaling, back testing, etc. So I'm going to take that as how many hours during the weekend do I spend at the desk on the screens doing trading work. With a 2-year-old and a 4-year-old at this stage of life, where I'm at in my trading career, not a whole lot typically. Most weekends I am not working much. However, if you were to ask me that question in a couple of decades, past, you would get well, when I'm in college, my buddies are going out on the town on Saturday night. I'm like, no, I can't. I'm running this sick back test or developing this or testing or studying this or refining process or blah 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 blah. So my answer now is a lot less because of where the position I'm in. But historically, good bit of weekend work. I lost a few girlfriends along the way to weekend trading work. That's for sure.
Oh yeah, that happens.
Oh yeah.
And if you're not ready for that sacrifice, then your heart's not in it. All right, how many likes are we at? We're almost to 400, guys. At 400, we can do a giveaway. So let's get those likes up. Hey, from Tintin. How do I define an uptrend? Yes, a series of higher highs, higher lows above the daily 9MA. I spent a few months back testing SIL for the new strategy I created. It's really suggest it. It helps a lot. Yeah, let's get all the R's today. So far, only 2 R on this trade. We'll see if we can hold here for possible more R's. And then I will wait for the IB trade to take here with you guys and see if that works or it doesn't work. Either make it some money or lose it some money. I reckon, Bobby.
What was that supposed to be?
What was that? I think that was something that came through the Zoom.
It was an audio clip. That was a Stowe clip. Don't worry about it. That was that you were crossing up Waterboy and Talladega Nights. You were doing that old Louisiana man grumbling.
Cooper's like, I
Ricky
remember that
Bobby.
part.
Oh, Ricky Bobby. What was that?
That was in the credits. You missed it, Cooper.
The outtakes. Oh, my burner account. Sorry, I was typing in my burner account in the chat there. But I misspelled my name. Y'all know what they call a nerd with a sense of humor, right?
A
You know,
nerd with
Chris?
personality,
No, a husband.
husband material.
That's right.
A catch. Oh, yes. I have a slide of some of that sprinkled in.
Oh yeah, you gotta have a little bit of tism. I got one more joke for you. This one's for the chat. Um, they let's see. Lance is not a super common name these days, but back in medieval times, they used the name Lance a lot. Ba-doom-tsh. CST Trader says, Lord, have mercy. The NinjaTrader official account is booing me and throwing tomatoes at me. Mm. Mm, mm. Thank you, Sphinxter. Nice name, Sphinxter. I like that. Yo, man, you corny. Have we opened yet? Let's get this show on the road. I'm pulling out Lancelot jokes.
Chris, what are you watching your four screens? TradeAway, NVIDIA, NQ. Yeah, everything. One screen I have ES and NQ, SPY and Qs. On the other screen, I have my trading screen. On the other screen, I have charts to look at swings. And on my fourth screen, I have more charts and another execution window there. Since I trade different things. But the tradeaway is just like a little pop-up. I only bring that up to execute. I don't need to be looking at it.
Yes, the moves in options happen before the move is in indices. All you have to do is look at those moves and then run over, load up your platform, place your orders in indices, and then they'll move after the options have moved. It's pretty sweet alpha.
That's a nice candle. Looks like we'll hold up here into the open.
I have this sense of bearishness. I just want to short it. What's happening?
All right, let's see what we get here. Oh. And I'll get stopped out here at break even if we take it.
I'm not laughing at you. I'm laughing at the chat. Merritt,
Easier.
what did you do?
All right, so I got stopped out on the runners on that morning trade, and I'll just wait to see if we can come back down to another support area. But finally seeing some weakness. Let's see if
I
it can
just scaled
hold.
some out here. I think this market is a little conflicted in between those spots we talked about pre-market. It's like a good spot for the buyers to respond off the low, and then as we talked about, was it 74.23 or whatever it is potential resistance. Austin, I essentially don't believe that there's any edge at all in any single tool or reference. So I don't care if it's whatever the tool, a standard deviation from VWAP, VWAP itself, a moving average, cumulative delta, a fib level, a support, I don't think that any single thing alone provides positive expectancy. I always teach that edge is incremental. Edge is arrived at by putting multiple pieces together and finding spots where there's patterns amongst them and confluence. That's my take, at least. All right. Is it buyer's turn here? A little shift on the tape. Peter says, okay, I've heard enough
here.
Good luck to you. And to you, sir. A good day to you, sir.
All right, guys. Well, we hit 400 likes. So let's see who the first winner is here. Thanks, Tom. And you have to be in the chat, all right, guys? So wake up.
Wake up.
All right, so the winner is at 12M Hustle 37. If you are here, show yourself. Show yourself. Oh, there's two winners. And Pablo Loshi. I know you. Pablo, where you at?
Pablo Loshi. Congrats. That's a regular.
Show yourself. All right, guys. So we're gonna spin here. Let's see what you guys get. We'll do the first one for 12M hustle. All right, come on, come on.
Sticker pack.
You get a sticker pack, guys.
You guys got gypped. Oh, man. Could have had a silver coin. Woo. I think I've got my silver coin. Have you guys seen this?
All right, let's see Pabloshi. Where's Pabloshi?
Meanwhile, my trade's working. If anyone cares.
Pabloshi. Is he here?
Yeah, they're all there. Found it. Look at this. 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 We got the bag.
I have mine too. God, put those twigs away, please.
Leave me and my twigs alone. Laugh it up. But I'm short and I'm taking it to the bank. And I've got the silver coins and you've got the sticker pack. So laugh it up. Oh, me. Actually, I do love the stickers. We got a sticker pack too on both of the events. And I like them. They're good. I don't know what SBM is. I don't know what that means.
All right, let's see. So we couldn't find Pabloshi, so we have a new winner here. Reddick 30. Reddick, show yourself.
Well, the buyers are really not showing up off this low yet, but it's their turn to take over.
Is Reddick here?
Yeah, that's what I'm talking about. Jay's playing. That's what I'm saying, brother. I'm taking a look at what's happening. Obviously, we're in an extended rotation from where I got short from VWAP. We haven't taken out the low in terms of an actual stop run yet. But we're not seeing buyers respond yet. So I'm looking for the exit door on this. This is not a big swing trade. This is more of a little move to move type thing here. Again, I think the market is mixed here. It's got great bullish support from the lows and pretty good bearish support from where I shorted. So I literally have my hotkeys that I trade with. I have control depressed with my left hand. It's pressed so that all I have to do is tap my exit hotkey with the other hand to get out of this position. That's how close I am to getting out of this position. And I'm out. And there's the buying coming in. Great exit. No matter what happens from here.
Where's my Zoom chat?
That's true, Fractal. The original sticker pack did include that monstrosity.
All right, guys. So since those two people are not here, we ran another, and the name is Sam Starrat. If you are here, somebody show themselves. Jesus, it's been third name already, guys. Is there an indicator that plots the IB high low automatically? Yeah, there's a lot of
like the easiest thing in the world to code up.
Indicators. I created my own as well. All right, so we have a new high. That break-even stop took me out. Murmur.
Isn't that the purpose of break-even stops? To take people out of positions that would have otherwise worked? I thought that was the purpose of them, right?
You know what? I don't need your attitude.
Uh-oh. Here we go. It's his strategy, Carlon. He's not. If you want to learn it all from him, you can kind of join his group or whatever.
What did they say?
They said they don't understand your IB strat. It's like I don't even understand his IB strat because I don't know everything about it. He doesn't tell everything about it.
Yeah, I don't. Guys, come on.
Come on. Come on.
Do not have a course. There's a lot of rules to it. I've shared a lot here. All right, so if we are going to continue higher, I'm going to be looking for a pullback here to see some acceptance of the and then higher. But yeah, Fitz, you got to press the button though, my friend. Okay, I gotta focus here.
Q.
Oh wow.
Wow, the difference between NQ and ES is stark right here. Not that I think there's any meaning to it or implication for anything, but they're quite different places relative to recent action. With qualifiers, Loon.
All right, so we're seeing the bounce as always, right? We pulled back into support right around the CPI news, and we bounced, and we just created a higher low, and we're seeing higher. There's just nothing bearish about this, guys. We remain in an uptrend. Your job is to align with that structure and extract the most you can. Yeah, we probably need a new another redraw.
Wake me up. You know, Loon, that has been the bane of my existence for some of my trading. Some of the most frustrating uh, things that I've experienced over the past month or two have been weird, wonky lows being left behind that don't really create good excess. I can neither confirm nor deny. Simple. If you know, you know.
What time do I look at the IB? It's only one time after the first hour. Or what time do I trade it off? I trade it off to 2 minute. Do I ever look at the YM? Never. Only for swing trading, not for day trading. Cyclicals are weak, but I mean, we've known this, right? We have known this for the last couple weeks. It's been a tech-only party. Financials are weak. Industrials are weak. Home builders are weak. It's AI. AI is the name of the game. We have Amazon. Nvidia's pushing at all-time highs. Amazon's pulling back. It's a little bit of a mixed tape here with a lot of names that are holding and some names that are pulling back.
Have you seen this move in YM?
Yeah. It's breaking the 4-day consolidation.
Something's up. I'm short. Something's up. I'm a vibes trader today, aren't I? Just
You're going to be vibe trading for the competition?
Oh, that reminds me. I don't think I've signed up for that and all that stuff. I gotta take care of that. I don't do email anymore. I don't really check physical mail.
Okay, guys. So we read.
All right, I'm scaling out of a little bit.
Let's see who wins. So you guys got to be in the chat. Gerald the trader, show yourself.
So this is an atypical entry tactic for me for those following along at home.
Oh, there we go. He's here. Congrats. Let's see what you can win here. Do we have the wheel up? All right. Let's roll. Come on. Give him the silver. God, I'm trying here, guys. At least you get a cool hoodie. Congrats to the winners.
Took some more off because it should have dropped there and didn't. So just, this is not a trade where I'm gonna take a stop or really lose
So far, Enki's just consolidating
so
here. It's not doing
that's
much.
why I'm being aggressive with the scale outs.
I'll let Merritt take over here with this trading. I'll be around for the IB.
Wow. So I don't follow the Dow. It's rotational for the year. It's not even in an uptrend. That is insane. So for my charts, it makes sense that it's so again, this is a momentum style trade here. Therefore, if there's not good momentum, I'm not going to be in this trade. So I'm not even going to let it come back up above those bar highs right here. Again, it's an atypical entry style for me. I usually get in at turning points. This was a momentum entry on extended move, looking for the stop run through the lows. And it's kind of doing a crappy job, at least a slower job than I would like for it to. So that's why you've seen me take 2/3 of it off for peanuts. Well, I am kind of blowing my mind there. All right, I'm going to scratch it out. A little bit of a reversal on the tape. Boiled peanuts, that's nasty. Those things are not good. I'm sorry if you like boiled peanuts, but
I thought you would be an advocate for those.
No, they do them down in South Alabama, but I don't like it. I'll tell you what's good. I bet you Jim Cagnina loves this too. Pickled okra. If you guys never had pickled okra, that is real nice.
That's the stuff.
Mm-hmm.
Oh yeah, that's the stuff. So far, we're holding this gap down here in the RTH session. Try to close it, bounce, rejected. There's a change in character in the short term, not in higher time frames yet. But so far, we're just range bound. This cloud here that you see is it's the IB indicator, but it's sort of tracking it since the open, so it's not the actual high and low of the IB, but you can sort of already start to see that, we're sort of range bound here. This is like one big range. So that tells me to chill out, wait for more data to understand if it's going to turn into chop or we're going to start trending. And, as a trend follower, what do I need to see? Well, if we're going to be range bound, then there's no need for me to put on risk at the moment. And then waiting for information would be, well, if we can push up back to highs, form some acceptance, consolidate, hold, then I know there's a little change in character between the recent price action to now, meaning that instead of rejecting back down and filling out this range, we're holding at the highs. Buyers are proving once again that they are stepping up higher. And then that can be considered acceptance up here and then a breakout. Same for the downside. If we are truly to go make new lows, we need to come back down here, fail to bounce, and then push down to new lows. So until that happens, there's no information here telling me that we are going to be trending. For now, we are in a range. And until I get that information, then there's nothing for me to do here. But if you're scalping, right, if you're more volume profile or order flow, then you're finding entries here. Yeah, Cat's been kicking ass, but Cat has a lot of a AI component to it. All this big machinery is being, yeah.
As in like automated farming kind of stuff or what?
Yeah. They're big, huge on that. Yeah.
How can we break into these coins, man? I want to be like, what's that guy from Batman? Is it Two-Face? Let the coin decide whether we take an entry or take an exit. Better trader than I am. Oh, I just got in. I just cracked it. We're in.
Twelve M Hustle. How does he get his stickers? I think
They'll
they will
email
reach
y'all.
out to you.
Yeah. They know where you live.
Just share your AOL email or your MySpace account.
Exactly.
Make sure you put Ninja on your top 8, and then they will reach out. They will email you the stickers. You got to print them out.
You got to get a special kind of paper. And then well, something just triggered on one of my game cameras out in the woods.
You live trading and live hunting, huh? Wow. A man of many talents. You got your hand on the mouse, one hand on the mouse, one hand on the rifle.
Little doe back there. Yeah, it's actually Savas, it's actually a good exercise. It's kind of focuses you on your trade management, because now all of a sudden the entries outside of your hands, outside of your control. It's a cool exercise. All right, let's flush them, Christian. You ready?
Yeah.
Y'all ready, chat? Get them. Get them.
All right, remains weak here. We tried to bounce. We got rejected, right? That's information. That's data telling you, hey, sellers are still in control. ES is coming down to the next area of support here at prior day low, 73.90s. This is where losing this can signify more weakness into, I would say, 73.60s area. But I am interested in a reversal from there. But I will maybe focus on NQ versus ES. No longer trade ES.
Yeah, Mando. Christian he's almost single-handedly propping up the stock. He's they just cannot produce enough for him, and so he is really a big tailwind for that stock.
When you're high on testosterone, you just need supplements to help bring it down to be more normal, like Merritt. And they I have a great partnership with him, and they try to supply, but they're just saying Merritt's testosterone is just so low that we can't give you enough to help you be, similar to him. So
let's do a poll.
For sure.
Who do we think has more T?
Big Him's partnership here, and just it's through the roof.
I got a full mustache. I got biceps through the roof. I got deer in the backyard. I got a lip pillow in right now. Please. Please. What's your case?
Because I look like this doesn't
present your case.
Okay. This happened because of, I was out on the streets and I lost a kidney. You ever been through that? I don't think so.
Here we go.
I don't think so. Also, did you just say lip pillow?
Yeah.
That's not the most low T statement I've ever heard.
No, no. Well, I'm going bald. That's true. So another check for me, I guess.
All right, I got to check out my swings because they're red. Close the market. We're on day one
Do
of
you guys know
pullback.
how much I love Chris? We just gotta be honest here in the chat. We always give each other a hard time. I'm so glad that we got paired up and we stream together and we do this. I'm so glad I get to meet you at these events. It's awesome. Awesome knowing you, brother.
It is. It is. It was a great time. Yeah, I'm his. Am I your first Hispanic friend? Is that what's happened here?
That was my first Latin. Oh man. Merritt looks like an 80s serial killer. Thank you, Lulu Hawk. Appreciate that. Oh, and also some guy was like, just trade, Merritt. I've been trading. Let's compare fills today, huh? You and me. Have I ever been to Pensacola? Yeah.
Names are acting okay. They're pulling back, but everything's being supported. So we on the cues here on the 5 minute, we do have our side divergence at these lows. As ES comes into prior day low, there is a divergence here between both of those. So I'm kind of interested in a reversal down here. Let's see if I can get something here going.
It's an on coffee.
This is a pullback into the 20 EMA cloud on the 4 hour as well, which is support. Let's be patient here and let's see if ES can take out prior day low. While I watch my swings, gotta do something here. Let's see. Okay, Broadcom is doing well, consolidating. Amazon finally pulling back. I mean, this is a pullback we want. Amazon, huge AI beneficiary. We might take out prior day low here in ES, and then that can set up a possible reversal that I'll be watching.
Christian, do you keep any Hanks on your desk?
No, do you?
I usually got a Hank handy somewhere.
Are you just trying to one up me in manhood, or what's going on here? Let me see. Do you happen to have?
I got all kinds of things within arm's reach right here some of which I cannot show on stream. For YouTube policies.
Do you have lifetime supply of life-saving medicine? I don't think so. Okay.
I got I think I had some ibuprofen in my my briefcase. Does that count?
No.
Pocket knife. You always have to have a pocket knife.
I got a machete, but I can't show that, so
A what? A what?
it's ASMR Merritt time. All right, so we're getting a good bounce here above prior day low in
You have a
ES.
what?
We might not get it. I'm interested in a reversal. The SPY's also into, not exactly yet, but we are close to that gap up low from Friday. What? Where's that from? That's from a movie. What?
I don't know.
There's a 15-minute NQ divergence here at these lows. Hot Rod?
Yeah, Little John. That's true.
I don't remember. What?
Slightly more emphatic what?
What? Where's that from?
Oh yeah, it was yeah, Chappelle show. It was the skit where
Oh, yeah, there you go.
uh it was a play on him saying what all the time, but it was actually like he couldn't hear, so he just kept saying what.
What?
Cool. Spin the wheel. Yeah, I like the bounce here. I do. It's I think sellers are kind of in control of the tape. We're we're kind of holding below that pre-market balance. But yeah, we've taken out the lows. Could see a bounce. I don't hate it.
My entry was a bit aggressive here, so I'm debating if I close it or keep it. ES is leading the bounce.
Baxter, I didn't know you spoke Spanish. I'm not even mad. I'm impressed.
I closed it. I'm going to wait, see if
Yeah.
we trigger above here. I took like a minus 0.15 R maybe.
Could you get that to 3 decimal places for me, please?
Too much math. Right, if we do reclaim above this lower high, though, I am interested in it. Lower low, lower high. And if we fail to make a new lower low, then we can reclaim that last lower high, and I'll look for a reversal back up. ES, had the chance to take out prior day low on that last push lower, and it failed. So unless we reject from here and take that out, then this can turn into a higher low, like a very small higher low against the low, and mark the IB low and then push out. But we'll see. I mean, if we take out prior day low, that would be actually better. But we'll see. We'll see. All right, that'll be my my second trade here before I go focus on the IB trade here in 20 minutes.
Yeah, Jim, copper is shaken and bacon.
Shake and bake.
Shake it back. Shout out to Merritt Coffee in Austin, Texas. Had to get a mug. Drop by Curlin's for some what are those things called? The breakfast things they eat in Texas? I'm blanking. No, not tacos. Kolaches, thank you.
Someone say tacos?
Brisket kolaches.
What did you call me?
A little coffee. That's out on a picnic table with the sun shining. That's a good morning.
No.
Have you ever had kolaches, Chris?
No.
It's a cool thing, man. I'd never heard of them till I went and had them in Austin. Here comes the buyers.
We have a double inside candle here on the 2-minute NNQ. So we're contracting on a smaller time from getting ready for a push. I need to put on some dock.
It's a train wreck. Guys, we're going to spin the wheel for Montserrat, Sir Star Rat, depending on your pronunciation preferences.
All right, I get in on the break of the lower high here, and I'm looking for a bounce. We are confirming range bound action for now, and we are seeing divergences on the 5-minute, on the 15-minute. And I remember ES was going to take out the prior day low. It didn't. We created a higher low against that. There's just a lot of indication here for higher. So I'm willing to risk some on.
You better get that first scale into that VWAP area, though. Hussein, no, I do not place any importance on such. Thanks for sticking with us. Pun intended. Well played.
All right, and then while that plays out, I will focus on the IB strat here in 15 minutes. and see if that can work today. Hopefully. I hope so. It's been on a hell of a run, so I know the losses are coming. Remember last week when I told you I didn't think it was going to work?
Mm-hmm.
It went up all the way to 6R.
Yeah.
It's just, it's hard to be so bullish at such a strong move to get like a,
Sure.
but I'm
That's
glad.
why I say my process is a better trader than I am.
Yeah, right. I think that's what people like need to really understand the rules and the systems, because if you're not, you're leaving a lot of money on the table. If you don't understand, the total sort of, the points that you can capture or the MFE, then you don't know exactly the dollar amount that you're leaving on the table.
A process will do things that the human is simply not capable of doing because they're smart. That's the gist of it. The human's going to outthink it, overthink it, not trust something because of whatever reason. And the process is just dumb and beautiful. You know what I mean?
Yeah, 6R, or R means this is a 2-minute time frame, but it means just how many standard deviations away from your risk. Like if my risk here is on this trade that I'm in, it's see 51, 61, 64 points. Yeah, it's risk value, 64 points. So 1R would be 64 points positive in my trade. 6R would mean I captured 6 times my risk. And to add to what, Merritt and I said about process, guys, a lot of you guys, I mean, all of us go through this, but we don't really get, unless you get really good at this and you really are able to cross that, that barrier from not profitable to profitable, you won't really understand the actual dollars you can make until you sort of work on the foundation of the system and compound that. Because if you don't do that, it's very unfortunate. Now it's both beneficial and not when you're trading these props, is that you're stuck in trading smaller dollar values and you're stuck with that mentality. But if you don't know how to compound your account and increase your risk as doing so, instead of having a fixed risk, you won't understand, right? Like the actual dollars that you can make. And you won't have the confidence to hold your positions. You won't have the confidence to trade a 6-figure, 7-figure account. Like my risk now for the IB strat is at $1,100 per trade. On a 6R winning day, I make $3,600. $3,600 in one day. That's huge. Now think about it 6 months from now. I'll be risking $3,600 per trade, and I can make $12,000. So if you're trading these props and you're making $100, $200, $300, and you're repeating that cycle, you're not learning how to compound correctly. Okay, we have 12 minutes here. Yeah, look, Jack is a great example of that. He, when you're trading long enough and you know how to size things up, you can increase and you size up those swing trades. But you have to create the system and you have to understand how it works.
The only thing I would push back on is if you risk 1,100 on a trade, making 3,600 is not 6R. If you really calculate an R, a total all in, all out, like R value, it has to be average per contract, right? You gotta do that.
Well, yeah, my statement was on a full 6R day. So I reach my final target.
Once you've taken all the scales and hit the final 6R target. Yeah.
It'll be a 3.5R day for me.
Yeah. I wanted to make that point, not to
Yeah, no,
try to call
it's
you out,
true.
because I think it's important for the chat, to get those calculations right. Because I see it all the time. Guys will come in, they'll be like, I made 12R on this trade. I'll be like, did you now? Let's have a look at that, and it's you gotta get that math right. Average per contract. So the number of R you made times the size you traded on it, plus the number of R you made times the next size on the next scale out, right? Do all that, then divide it by the total size traded. And that's the math for total R captured.
All right, I'm going to take some off here at 1R, just because I don't want to focus on it as I set up my IB trades here, and I'll just let this ride now. And either it goes up to the range highs or we pull back, and I'm okay with that. I've paid for my risk. I already have a pretty good profitable trade this morning. This can be the second profitable trade, and that could be it for this account while I focus on the other accounts.
Kind of like the short here, but
what's my average R in my, let me see.
I just don't like trading often from the middle of the value on the day. So this is a common teaching point we'll cover here, and Chris and I are in total. Well, maybe not. We're theoretically in alignment on this. Chris and Merritt, do you try to risk the same dollar amount every time and use contract size to do so? I think the answer to that for most traders should be yes. I really think that's a good thing to do. For most of us technical, simple traders, we don't know which. I don't care what your conviction level is. If you were to go tag all your trades truly at the onset of trading, or not in hindsight, because what happens is people tag the bad things to the losing trades and they put tags of good things for the winning trades. Okay, it's unavoidable to be a little biased in hindsight. If you were to tag your conviction levels before you put the trade on, 90+% of you, myself included, the data would show that your conviction levels don't correlate with the success of the trade. And so therefore, it makes more sense to just keep your sizing, your risk per trade consistent. And you do that through having what we call an R value, a targeted dollar amount to risk per trade. Then you take your stop distance, you take, you adjust your contract size to accommodate. Tight stop, you can trade more contracts. Wide stop, you gotta lower the size to keep that risk targeted.
All right, so my average R is 0.435. Yeah, my risk is the same. It's percentage based. Well, actually, it's a fixed percent, but the dollar risk is different. That changes. I want to make more when I'm doing really well, and I want to lose less when I'm losing. Which reminds me, I need to prepare here.
Joe, I'm afraid we can't answer that for you. It doesn't matter that, whether you're trading prop or personal account, it doesn't matter that you're an MES trader. We don't know, anything about what matters is the style, the time frames. Do you liquidity preferences in terms of thicker markets, thinner markets, or do you even know, that type thing. The thing to do is to just look at the ones, go to like any number of sites that'll show you kind of the most active products in the future space, and go check them out, right? Sim trade them, see how it feels, get to know a little bit about kind of the nature of them. Hello. Little squirreliness there.
Yeah. No follow through on that bounce, guys. It's telling you that this can potentially go for new lows now.
It was just kind of a weird vacuum, though, right? It just immediately retraced back up that whole spike that it had made. Or spike, I shouldn't say spike.
We are still range bound, but it does feel weaker.
We've rejected VWAP 4 times on the session from below.
Yeah, that's data, guys.
No DSB. That's where Lance and I would disagree.
I believe in A+ setups.
Yeah, I do too. I just don't believe in betting bigger on them. That's right. There's not one way to do it. I don't have the market cornered in answers to how to approach trading. I just share my experiences and from my own trading and running a desk of traders.
All right, I'm moving myself to 0.5 minus 0.5 R. It's not looking good here. I took a stop on that, so I'm out. Your ability to follow your rules exactly is a clear major part of your edge. Yes, we should all thrive to do that. All right, I got to get ready for the IB trades now.
Yeah, my point. So someone brings up a nice counterpoint here. Like, all right, Lance would say if you got 2 aces, right, a poker analogy, you bet more than when you got dead man's hand or 2 and 9 offsuit, right? That's true in poker because you're literally we know the data. Notice when I made my point, I said for us simple technical traders, where truly the outcome historically for the style is not knowable. The data, you have to have the data through using tags and journaling and logging, all that stuff, to know, is this truly a better opportunity with more edge? And if that is true, you're not just saying that to yourself because of what did I say? Conviction, that type thing. If you're not doing that and you actually have the data, then more power to you. Interestingly enough, Dr. Brett Steenbarger is in my camp on that. And he has worked with probably more successful traders than anyone on the planet. And if it's special situations trading and arbitrage type stuff, then by all means. But if it's simple technical trading where you really don't have any data on the expectancy and being very, very lopsided in a certain situation, then you are better off keeping your risk consistent. And that's a true statement. Yes, of course, trading with Jose. Yeah, that was my point exactly, Hoodrich. Poker is such a simple game. There's 52 cards. You know what 2 of them, or after the flop, you know what 5 of them are. You know what the pot odds are, right? You know, therefore, the risk and the reward of calling the bet versus what's in the pot, your pot odds. You know how many outs are to make you have the nuts. It's a simple game with fixed things compared to trading. So it's correct. It's not a fair analogy. It sounds pretty cool to say I bet more with pocket aces than with a 2 and a 9, but it just doesn't hold up in most people's trading.
All right, so we have the IB closed. We are below the IB low. One of my rules that you guys have not really seen me share here, because we have not encountered a scenario like this while I'm streaming, is that if we are below the IB low, that has to reclaim in order for me to even consider taking along per the rules, because essentially in waiting for that to be reclaimed, I can avoid trying to buy the low in what could be a deeper pullback. So as we're seeing that now, this is becoming a deeper pullback, which is just healthy retracement. But for the strategy, it's not looking, if you guys remember my comments, it's not looking to buy the low. It's looking to buy the higher low after the low in order to avoid multiple stops, right? When I did the back test, I said, well, hey, I like buying weakness into support in an uptrend, but there are days where the pullbacks keep dropping lower and lower because we're seeing some sort of daily swing high put in and getting a retracement. So in order to minimize the losses of doing that, I then applied a rule to say, okay, what if I buy the higher low against the low of the day? I then back tested that, right? I iterated that, and then I went back and it worked out much better. So I wait for that now. So there's no IB trade for me this morning unless that can happen. And I get to save myself some money here. Strategy's doing well though over time. This is the P&L from April 14th, series of higher highs, higher lows. Took one payout and I am 400 or 500 bucks away from the next payout. While the personal account as well grows, it is now at 23,000 from $5,000 that I started at in March.
Pretty sweet. Hey, Merritt, what's Aptero's take on traders trading news headlines? Is it permitted? Are you fine with that? I'd like to join the desk. Come on in. Yeah, it's fine. If that is part of your edge and you trade around those events and you like those catalysts, and as you were saying earlier, that's how you kind of size up and whatnot, then by all means, do it. A technical trader who has no business trading in front of the next highly anticipated FOMC meeting and has never done so, and then goes max size in queue 8 seconds before the FOMC release, that's a little bit different. That's a little bit different. But if it's repeatable and something that you do, we embrace it with open arms.
The next area of support below this that I have in NQ is 920s, 930s. If we can get down there, I will look for a reversal. ES has 73.65 to 670 support. And if that does not hold, then we traverse all the way back down to 73.40s. But there are some divergences down here. So can't be too bearish yet. Thanks, DC. How do I develop rules? I identify what I am looking to accomplish, and then I look to see what rules can help me reach that objective, right? I create my objective, I identify it, I define it first, and then I create rules to help me reach that objective. And those rules can be, like if I am a trend follower, a rule is I want to participate in strong uptrend days. Okay, so what has to be my entry rule? What has to be my stop rule? What has to be my position sizing rule? And you start, just going through things like a really known one is reversals off prior day low or London low near the open. So then you say, okay, I want to buy the fail breakdown of those. What can my entry be? And that can mean varied things, VWAP, reclaim, maybe there's some order flow, delta flip, whatever, those order flow guys look at. For me, it's a 9MA reversal. And you combine that and then go back in time and see what it does over 30 days. If you like those results, do a 90-day back test. Change things up if that something doesn't make sense. Keep doing so until you like a 90-day back test. And for me, right, this is a manual back test. And then once you're happy with the results or with the rules in place for 90 days, do a year-long back test. And if it doesn't work, do it again. Right? I did all of that for months. So now I can just show up and execute the strategy, and I don't need to really think much. It takes 10 minutes a day. And that's it.
Or just take the variables and plug them into that random forest. Press play. Check out that matrix.
Do you have to wait until the 10:30 candle to close? Yeah, the IB is the first hour of the market. I believe anything under that is considered an opening range.
Anytime I've used an initial balance, personally, I've gone with the only the first 30 minutes as the IB, but that's non-traditional. The traditional is 1 hour, the first 2 TPO periods of the session.
In one hour, you lose a lot of the initial moves of the day. What if your strategy didn't trigger an entry for you? What did you miss? If you have a profitable strategy that can be executed after the first hour, you didn't miss anything.
Well, I mean, I understand their point. It's I think it's a little lost on there's pros and cons. So if you shorten the time frame of anything, right, we could say, well, instead of trading, just in general, a different example, instead of trading a 30-minute bar, I find I miss out on opportunities, so I use the 3-minute. And then someone says, well, using the 3-minute, you miss out on opportunities. I use the 1 minute so I can see more granular, right? So, but what do you also introduce? You essentially lower win percent, right? You introduce more false positives the lower time frame you use, whether that's initial balance or whether that's a bar period or whatever.
Yeah.
So it just depends on a cohesive strategy, what all you're trying to put together. Each chart has to have a job description, and you have to. We talk about matchups, matching up the trade management scheme that you apply to not just the strategy, but to where the bulk of the edge comes from in the strategy. And one thing that we talk about, like in our fellowship program, and we just got through developing some trade management process schemes, or each of the traders did. And what I told them was design it in a way so that if you are more longer term hold, swing, want to swing, you're really focused on the context and the big risk reward, design the trade management scheme to complement that so that the bulk of the results, whether wins or losses, comes from that. Be more willing to give back open P&L, all those type things. If you are more focused on shorter term trading, you're an order flow trader, those type things, you want to pair up the trade management to have success or failure, right? Positive results come from how good is your timing, how good is that momentum that you capture and things like that. You have to match up trade management with strategy and the origin of the edge.
Yep. And by the way, guys, next few weeks or so, I will be doing a strategy session where I will be discussing strategy creation. This will be separate. This will be a separate segment. Strategy creation, development, back testing. So it'll be a really cool thing. I'll share more as I get more info, but that'll be coming to you guys next few weeks.
Cool.
We'll do it live. We'll do it live. Yeah, it'll be here on Ninja, on here. What time frame do I chart your boxes? Well, those can be any time frame, because if you have a daily consolidation, well, that's a box or a range. All right, so it looks like we might be trying to put in a fill breakdown under that prior day low in ES. We took it out. We're reclaiming it. ES and NQ back above, below the IB low. There's still one more rule that needs to be met here for me to have a green light to look for a trade. But I'll refrain from sharing that at the moment. I just want to sort of highlight that, the strategy is not looking to buy the low, it's looking to buy the higher low. Because in real serious downtrend attempts, those lows are going to be lower, lower, and lower, and you're going to go through stops.
David, yeah, we will run discounts and stuff from time to time. You know, we don't really do much of that sales game over here. It is a one-time fee, so you know if you're in it for 2 months, it's half the price. If you're in it for 3 months, it's a third of the price, right? Compared to the monthly kind of recurring stuff. So consider that. And I love this part. Do you plan on hiring a performance coach for your traders? So if you are on our live desk and you need to talk to Steenbarger, you need to talk to Stephen Goldstein, you need to talk to Jared Tindler, we are going to provide that for you. We will arrange that, and we have those relationships and for our live traders. Beautiful rhythm to the movement today in the S&P. Very tradable. It's a prop desk. What do you think we're doing? We're we're trying to make you as good as you can possibly be. I know that sounds refreshing, but that's what we're doing. You need more risk? Let's have that meeting. Present your case, right? We'll talk about that. All right, Crudele says the bonds are super important. What are they doing? Let's take a look. In a downtrend for the week, holding the key resistance high of day. Retested last week's value. Nice little wick, little stop run through there, and then the continuation. Currently eyeing last week's low. Bonds be ugly. Oogly.
Which bond you're looking at?
Oh, I'm just quoting Tracy. But yeah, I was looking at the 10-year. Yeah, even on a bigger time frame, like a daily chart on the 10-year, it's certainly eyeing kind of lows for the year and whatnot, which was value area low for last year. So where we bottomed, kind of where equities bottomed, that was such a wild bottoming process across just about every single market into that late March, early April low. Everything just was technical. It was kind of picture perfect where everything turned from. Very, very not normal.
So we bounced right into that 25% mark of the I being rejected. No trade for me here on the IB strat for today. At least for now. It can maybe something later in the day, but this rule helps me avoid losses, which helps when you have like a 55% win rate. A lot of weakness today in semis. Those might have topped. Looks like we're going to go for new lows here.
So Chris puts additional variables on the IB strat. It's not just below the IB. He's short. He's looking at bigger picture trends and only using the IB to align with that and to take part.
And we're above my daily trend filter, so that's the daily 9MA. So I can't short it. Even though you could say, oh, today a good short, we bounce into the 25% of the IB and rejected. Cool. But over time, shorting in an uptrend will not work, right? I want to have the market do the heavy lifting for me. So what do I want to do? I want to buy pullbacks in an uptrend. Will I miss some days that you do see lower? Yeah, but that'll be 2, maybe 3 times out of 10 that works. Why do I want to position myself for that kind of probability? Yeah, Joe, only if we're below the daily 9MA does it look too short. So if you guys remember from what I share about my strategy, so here's the IB low. We tested it, right? And we rejected, but we need to reclaim and then start a downtrend, meaning we need to see something like this. And then that initial bounce ends, we start a downtrend, and then we reverse and bounce. Because what I want to do is I want to buy the higher low against the low. If this is the low, I need to wait for the full uptrend to fail off the low, retrace, start a downtrend attempt, and then reverse once again from that second downtrend. So that reversal will allow me to get in on the higher low against the low. I am not, it's not designed to buy the low because it will never know when it's the low. So if the low is confirmed and we reclaim the IB, then that is confirmation that buyers are showing up. And if on the next retracement after that bounce is over, then it'll look to buy if other rules are met, right? Everything has to be rule specific. If, for example, if we pull back and do something like this and then come back all the way again here, once again, we now need to reclaim the IB low. Okay. And then once again, I will need to wait for a pullback. Like it's very rules driven and I cannot change that. I designed it that way. If I'm looking to participate in the full expansion of a daily candle, what do I need? I need to confirm that the low has been put in, and I need to confirm that there has been a follow through after that initial pullback from that low. And if that doesn't happen, then we have no confirmation that buyers are showing up to have follow through. So because of that, it will not look to get long. because we're still in an uptrend, guys. So, we can short, and I'm glad you guys are making your points, but don't forget what's the governing structure here. I don't know I don't know how to answer that.
Well, first off, it doesn't matter the account size. That's your typically, at least the way we do it, that's your buying power. So that's what that matters. But the only thing that matters when considering how much should I risk per trade, regardless of your situation, regardless if you're trading for yourself or someone else, is your risk of ruin and potentially any daily loss limit constraint that you have to work under. That is how you work backwards and arrive at how much do I want to risk per trade. And it needs to be strategy dependent. If you, on your most active days, take 2 trades a day, you can risk a little bit more of where you land on in terms of a daily limit and things like that. If you're really active and you're often taking 10 trades a day, look at what your worst days look like and where things are not working and where you typically don't recover from losing. You might need to split your daily loss limit into 1/5, right? 20%. And that's kind of that risk per trade you should kind of target. I don't know what the chat is saying right now. I can't
For
follow
me,
it.
my back test has -6 R losses in a row. So that means if I risk $500 per trade from the back test, right? I mean, the drawdown can still be bigger, but from the back test, I can expect to lose 6 times that in a row. So if I'm trading a prop account and I have a $3,000 drawdown, well, that means with the $500 risk, it will take 6 trades in a row to lose that account. If you don't like that, then cut that in half. Risk 300.
Yep. You design the risk of ruin. That is it. Period.
Yeah.
What's up?
Oh.
Yo.
Hello, fellas.
Hello.
How y'all
we
doing?
I missed the high of the day by 2 ticks on a limit order, so I'm pissed.
So not good?
No, I had an order at 96 half, 296 half. We traded 296, so I didn't get filled on my short, which ran all the way to targets. So I'm sitting flat right now.
You didn't get in. You didn't get in after that on the next bounce?
I mean, I just didn't chase it lower. So I just, it's kind of one of those things where you're salty about missing a 2 tick from the high, and I didn't want to be more aggressive than I was.
And then you go on tilt.
No, I haven't gone on tilt. I do have orders out there now, but I just gotta have to wait for retracement to get them filled. But yeah, I didn't want to chase it down and get stopped out and then go on tilt. Because if I miss an order by a couple ticks and then chase it down and then get stopped out on that, then my mind is totally screwed. So I just decided to watch it.
I know Nick has the short at the highs.
No, not today.
No,
Nick's
that's
got
like
the Buc-ee's
that's your
hat.
setup.
It is the week open short. I mean, that's about as clean as you could ever have anything. But I was not paying attention, and then suddenly we were back in the opening range. So I did nothing. I was kind of using like 160s as my session pivot, and it was holding there kind of off the open, and I actually got a quick long over there. But I haven't really done much since. I tried to knife catch this on the second attempt down here at like the 29K area. Didn't even get any off, ended up kind of letting it round trip me and stopping me out. So it's just waiting.
It was weird. I was kind of bullish, and then I had this thing where it was this I almost talked myself. I talked myself out of my initial prep and went with more of kind of what we're teaching some students in the fellowship program and whatnot, and just almost intuitively just went with that, and I shorted it like 5 seconds after the opening bell or something, and caught that down move, and then I scalped the next move, that kind of the last little piece of it down just after 8:45 or so. So I caught a couple pieces of it.
Yeah, it's definitely been a multi-entry move.
Yeah. All right, well, guys, you guys enjoy your sesh.
Chat,
Merritt,
love you guys. Chris, love you, brother. Enjoyed it.
too, man. You guys have a good session. All right, chat. Take care, everybody.
Take care.
Later, boys.
Later, guys.
All right. Good morning. Good morning, chat. Good morning, Jack.
Good morning.
See what we do here. At 29K evens. Yeah, something I think even what Merritt was saying, my bias for some reason was like long. I'm still in the camp, I guess. I just don't believe anything's going to take this down just yet, but clearly we're getting some aspect of a bit of a reaction here. It was nice to see us actually have some weakness so far versus it just being kind of up in the way. This is the first, meaningful pullback we've had of May so far. Like, this is the first time we've actually pulled back at all, really. So I guess we'll see where we go from here. Trust the sellers? No. Yeah, exactly. That's kind of my same camp of, I think, why even after the CPI print, I was kind of leaning long, because there was almost no reaction. So let's see. Last week's value area high sitting like right here, 29K. I like next area down though. I mean, this could waterfall another 100 plus points before buyers may even try to step back in if it doesn't bounce right here.
Yeah, I got all the way down at 28,722 is kind of what I'm expecting for the NQ.
Yeah, I'm kind of with you though. Like, now looking at this, I guess again, and thinking about it and longer time frame structure, I don't know how I missed that week open short. No interest trading above it. And then there was another chance to reoffer at previous day low and get it into the short. I mean, whatever.
Yeah, we're just stair stepping down here.
Well, now I'm kind of kicking myself. I was working on a few random things and got distracted after my quick little scalp long off the open. I need some tunes in my ears. Chat, how'd you guys do this morning? Finally getting a little bit of some fun. That is way too loud in my ears. Chat seems to be doing well then. You traded this session well. Good on you. Little choppy there, but seems like, yeah, now we're finally getting that directional move and a nice little much needed foot off the gas type sell down. ES is not even anywhere as much. God.
Well, what is my low for NQ? My low for NQ would be the same as your low for NQ. I don't really have. I mean, I think my next major support level is 28,722, but I don't necessarily think that would be the absolute low. It's going to depend on how it trades. I am a short bias right now. I have orders to short the market, but I need a retracement to get in it. Yeah, I did trade gold last night. And I think gold's probably going down right now to, it broke trend in Asia session for me last night. And I have really no major support in gold until like 46, 46. Or trend break higher. But there is a level I have here in the ES at 73, 78. But there's just so much momentum down. I'm going to be looking at the 50% retracement short for the open all day long here as resistance. And right now, that level of the ES is 96s.
Oh, what are we doing here? Like they keep trying to bait me into getting long. Also, why is my tick data still repainting incorrectly? It's driving me nuts. Like every candle should not be painting a color. Just I like having my delta neutral candles. Nick, Jack, ever traded gold back levels? I don't really know what those are, so I couldn't tell you.
Yeah, never heard of them.
Wouldn't mind a push back up towards like 29,071s. I guess the IB low, value area low for the session there. I mean, I guess there just was one, and I missed the chance to jump in on the reoffer because I was trying to scalp this long. I don't know. As I said, hard time believing sellers, I guess.
Yeah, understandably so.
At least down here, it's just like, all right, I missed the easy shorts at previous day low, week open, the week VWAP up there, and now I'm like, do I really want to trust them here that we're gonna get that next leg lower of another 200 points? I don't know.
Yeah, I mean, ideally 29,130 is good trade location for me, but I'm willing to be aggressive with just some tight first targets here.
Still doing this stupid thing.
I am on a 5-minute chart. And I am almost always on a 5-minute chart. Still seeing aggressive sellers here. Wow. So aggressive.
Mm-hmm.
Wow. Couldn't even get up to 40s. Right, an offer at 40s there.
Yes, it's still sitting on the lows too.
Yeah, I mean, I think we're going to continue selling off into the European session close here. Probably not get up on it until after lunch. I'm sitting patiently for a pullback in oil, though. I really want to get long that.
What's my target entry on NQ? I'm still kind of waiting and seeing. Like I said, I missed the short. I caught a scalp long. I wouldn't mind getting an opportunity to short this somewhere kind of 80s, 100s, all the way up to even like 110s would be amazing, but I don't think it's going to give me that opportunity. So I may be chasing or sitting on my hands. But yeah, I think at this point, piggyback on what Jack said, like I may just wait to the London close here in 15 minutes before I make a decision. But there is somebody kind of sitting here trying to absorb on ES right here at like the 73.80s.
Next level I got below in ES is 57. So if we take out the 77, I mean,
it's a little spicy. Same thing on NQ. I mean, it's another 100 plus points if we lose this.
Yeah, we've dropped. We've ripped so hard that this drop, no surprise. Hot CPI number coming in.
Yep.
And no surprise, just some profit taking here. As soon as we started failing below like yesterday's structure, and then really, really actually clear short action. It made it obvious when they finally decided to sell it. Jesus, my orders are right on the screen, my guy. Let's see. Trying to get long oil and get short NASDAQ. I am not waiting for, I think gold's in a short right now, and I'm waiting for gold to get to 46s. I think gold's going to get down to 46, 46. But I would be only taking shorts of gold. Everything on my market analyzer is basically bearish, but oil and copper.
I was bearish in the pre-market too when I saw you post that.
Yep. And it held true today.
How's the new version coming along?
It is basically just I still have some things to do. It'll probably be updated by the end of the week. So
Nice.
lot of updating. I mean, most of this code is getting transferred over, but I'm also adding some things.
Yeah, I feel like every day I'm building something in the trading. I get a new idea and it's still like some of the other things are not fully baked out, and then it just takes me down a rabbit hole.
Oh, totally. And they're all good ideas too. I'm like,
yeah,
so many great ideas. There's only so much I can do.
Yeah. It's like, why wouldn't I add another layer of decision making or confluence or something else, some other score or something to make this better? It's like you're constantly trying to improve something.
Yeah. I tweeted out last night. I actually tweeted out a little bit of a bearish bias, which, I have not made a comment about. I'm not a perma bear, as you guys know, but this thing was turning, and the price action was definitely starting to show its hand last night. And, this morning, immediate bid off the open, because why wouldn't we go higher off the open? Because that's just what we do. But then instant rejection. And the halfway back from, this week's high was 29,296 half. And I placed an order there this morning, and I should have front ran my own level, but 2 ticks away, and never took a more aggressive order and watched it go 500 points the other way, basically. So I think we're going to continue to sell off pretty aggressively here, and I anticipate no support really until 73.27 in the ES and 28,722 in the MQ. That's kind of where I think we're going. But are they going to let me in?
Nope.
Yeah, even I thought it was being aggressive at that 40 offer. We traded like 23s. Not aggressive enough. Every indicator you see on my screen is something I've built. So I call it the SUT Lomo. Good note, Greg. Sheesh. Question is, how long is this high in for? I mean, we haven't had a pullback for more than 1 day. I guess we had a 2-day pullback in late April, but not really, because we didn't make a new lower low. We haven't had 2 consecutive lower lows on the daily chart since literally late March. Yeah, I wouldn't be catching knives here today. Good rule of thumb is wait for a 25-minute swing low, meaning that low needs to hold for 25 minutes before you start trading against it. That'll keep you away from picking bottoms. Yeah, I have an order in CL at $100.41. So it's a bit a ways away, but you can definitely trade today. I mean, no thoughts on YM outside of it's just as bearish as the rest of the indexes. I am under the opinion that you should be trading from the short side until proven otherwise right now, actually. A little bit of a flip from the previous biases.
God, buyers. Buyers still sitting on this trying to hold it. Just let it go. Would I consider yesterday's low a poor low on volume structure? I don't remember looking at yesterday's low. I'm going to guess there probably was a clean taper down at 8. Oh wait, no, that yesterday's low. I mean, even if it was, no, that was not a poor low yesterday. Well, what time did we clean it up is a better question. No, I would not consider that a poor low. And if it was, I mean, it's been cleaned up anyway.
Oh, goodness. My order just keeps moving down with the market, but like I said, I do not really see any support until 73.27 in the ES and 28,720 is in the NQ. I was actually short last night and I'm kicking myself for covering. Yeah, I just had an alert hit text me to my phone. Gold is getting down to that 46 I mentioned. That is happening a lot faster than I anticipated. We are down 23 points in the last 5 minutes. Still not interested in taking my neck out on that though.
Gold is puking.
Yeah, I would not. Even though we're at my level, I have just too much momentum down to be buying right now.
God, I fixed an update. I need to remove a bunch of these squiggly lines here. I updated some things and all these squiggly lines populated. Too much for my blood.
Generational high, ladies and gentlemen. Oh my goodness. We are. Oh, somebody's in this. Why not just enter market price? Well, that's quite the rookie question. It's not a system. I'm not really a market order trader. And there's your 46 in gold in an immediate bounce. I don't sell just because I think we're going lower doesn't mean I'm willing to sell at market. I'm still have to enter systematically. And unfortunately, my last entry where I tried to get short was just not aggressive enough. And since that point, I was at 11.10. We topped and we just gone straight down. I don't just sell into lows. It's a dangerous habit.
Why no market in at lows? That's funny. Yeah, it's just not the way. I mean, and market selling at the lows is not a winning strategy. I don't care how to look at it. That is not a long-term successful thing. You need to wait for at least some semblance of a pullback to sell it into. Otherwise, you most likely are going to get ran over from the natural buying mechanism that exists in the market.
There's always another trade too. I am totally okay with missing trades. It is tough. I literally had an order 2 ticks from the high of this morning's session. That sucks, but I'm not tilting because of it. You know, that's just like you can't develop bad habits, even if they're right, even if they make money. They're bad habits. I'm not always monitoring all of the markets. I mean, right now it's pretty obvious. Like when the bigger markets are trending, I trade the bigger markets. But when when they're not, I just switch to markets that are. That's all.
Large trend days is when I start looking at the white van stuff from Nick's newsletter. Yeah, I try to put that out there for you guys. Those are longer time frame dealer type areas to watch for reactions. So hopefully that's helpful on a day like today. I'm glad to hear you are enjoying my Phantom of the Order Book white van nonsense option stuff that I'm not smart enough to understand, but just simplifying it down to level by level for you.
Gold literally went 3 ticks into 46 and straight up 50 points. I do like that level. I didn't want to step in because there's just so much momentum here, but it is good to see that reaction where I wanted to see it. That's a good example of anticipating a level, seeing it trade, and then getting a reaction in gold. I literally said 46s. We traded 45.7, and we bid straight up 15 points in 5 minutes. So that tells me that there's, market participants at that level. So I still want to see some structure develop back to the long side. That may not happen for a few hours, but clearly some buyers there.
Can I explain the OR mid the OR mid entry strategy? Leo's got a much better write-up of it that'll actually make more sense of how to kind of use it. For me, it's a reactionary level. It's literally the midpoint of the 5 minute. I've never looked at a midpoint outside of that for some of these, but all it is me watching that level. Sometimes it coincides with kind of the RTH open because I do have that plotted on my opening range as well. So like most of my MGI and the way I trade, it's me kind of monitoring the order flow as we approach that level or as we consolidate at a specific spot. Who's in control, who initiates there. So that's how I use it. It's just gauging entries based on the reaction of what the auction is telling me at that spot. Leo has a much more extensive write-up of it. If you want to check out his playbook and he did a whole X thread on it too, with actually citing the data sources and things. So you can check that out. But there was another question on like, don't my option levels and things change? Yes, the models have evolved throughout the day, but in the pre-market, I'm giving you kind of the end of day looking snapshot, the 1 day snapshot. It doesn't necessarily include the rolling, 0 DTEs because that's impossible. There's no way for me to see what's actually purchased in session, which yes, I know that is a good amount of the volume each session, but I'm still looking at the longer time frame type levels and how the end of day structure for the up and coming session or the end of week or the current total, let's say GEX and things like that, how that all kind of factors in there. That's what I try to put out for you guys, is at least me taking all of the different possible data sources and making it the most relevant ones. But as I said, I have one way that I like to look at it that kind of blocks some of the noise. But yeah, if you want to do something like that, feel free. There's a million paid providers out there. I'm just kind of combining several models into a simple, digestible way for you guys to read it in the morning. If it's helpful, great. If not, ignore it. The other stuff is based on legit MGI that's based on volume. And that's 99% of what I use. The options just is an added layer of confluence for me. No, I don't buy data from the CBOE. I just am compiling data sources that's out there publicly and making it easily digestible. Anybody could do this. I'm not adding any paid source or anything. I'm just compiling raw data from tools that I have. That's one of the things that's been very helpful with the language models, is me just taking a million different data sources that would be very hard to kind of look at simultaneously and having it spit it out in one bucket for me to look at based on a script that I didn't write the script, but I had the idea for what should be behind it, which is I think 90% of the battle with vibe coding stuff. Like, you need to actually have some imagination. If you don't, it's not going to work and it's going to look like shit.
And there is your puke into the 11:30 bottom.
Oh, yeah.
So probably get a start retracing here at lunch. And it'll be interesting to see if we actually wind up. If we start making new lows coming out of late lunch and dive again, wow. We'll see how this develops. But got an order right now at 28,984 in the NASDAQ.
Yeah, because always calm and analytical. Yeah, I think Jack's traded a lot longer than I have. You need to kind of remove the emotion out of this and something. You need to be a little more analytical and robotic to be successful at this, because otherwise you let the emotion win, which I am definitely guilty of on certain days, like still letting that part control me. But otherwise, yeah, it should be robotic. You should be more analytical, less emotion, less reactionary, and just more, what am I actually looking at? What is in front of me? What is the data telling me to make a decision? And the rest is vibes. How do you raise vibe levels when needed? Yeah, there's no easy answer there. But I think Jack said it yesterday in the afternoon. Sometimes when you're feeling good, when you feel like you've got a good grip, a good read on the market, when things are kind of working, that is when you should be pressing it. I know there's a whole principle behind this, and the gambler's fallacy and stuff, but in trading it's a little different. When you are kind of in that flow state and you're reading things very well, you should press it. If the conditions meet your personality and your strategy and it's working, keep going until it doesn't, kind of thing. That's one of the things I'm guilty of stopping. And I think it's because for a long time I was doing this as a means of survival rather than a means of continuing to try to get better and scale what I was doing. So I had historically always just like shut it down when I made what was a respectful number for me to keep going every single day as I was looking for other jobs. I think that's kind of why, because I was, still very much 1 foot in, 1 foot out, and was just doing this as a way to pass time, pay the bills, and continue to learn. But I think pressing is always a good idea when you're hot.
Shaw, it's a low before the breakdown. It's final leg down. That order is right on that low. So support becomes resistance. Man, that gold really bounced nice. All right, finally starting to get some buyers in here. I do think the puking is over for now.
Yeah. I mean, reversal like right around the euro close.
All it took was a hot CPI print. One more of those next month, and it might get interesting.
Doing this stupid thing really drives me nuts when my candle repainting like doesn't work.
ES resistance I have at 73.83s here.
Mm-hmm.
So just kind of expecting us to get right back to where we started this last leg down on this move up. Morph, it depends. It's usually based on the high of the day. It's dynamic though. It depends on what I'm referring to. I'll typically refer like halfway back for the day. It's there's an RTH halfway back, which is regular trading hours. And then there's the Globex halfway back, which is the 24-hour session. And they're two separate levels. But yeah, if you were to draw whatever the regular trading hours session high of today is to the regular trading hours session low of today, I guarantee when we come up to that 50% retracement, you're going to see sellers there. Now, whether they get anywhere with it, that's one thing. But you will see active sellers at that halfway back for the when it trades. I can measure it for you, but if we make a new low, it's going to need to be adjusted. Right now, the halfway back short for the day in the NQ would be 29,076. And for the ES, it is 73.90 quarter, which I really like that trade location. But if you just look at both those trade locations, draw a line on your screen, 73.90 quarter and 29,076, and just draw a horizontal line on those two levels, and they line up perfect with just an area you'd want to sell if you're just looking at the chart. Oil coming out of its highs finally, so you can get down by bid. Jeff, I ended up stopping out at break even on that gold trade that I held into the close. I actually added to it for 88s or 80s, I think my ad was, and then I just started going my way. It was a nice bid in the overnight session out of GC, and then I just moved my stop to break even, and we came down and took it out. But yeah, I really like the way we bounced off this 46s in gold. Actually, freaking 30-point ripper out of that in like 15 minutes. Not even. Like 15. 15. 30 points in 15 minutes out of that 46 level in gold. So yeah, I am a pretty strong believer that that maybe. I mean, now I just got to find a new entry. I'm not going to chase it this high, but I'm going to be looking at gold here. Honestly, I really like that sweep of GC here. Swept the prior day's low, came into the 50% retracement from the lows of the month. Immediate bid. Higher time frame, I'm still bullish. A lot of times there's just, a lot of positioning that goes on, liquidations. Traders get out, weak traders get washed, strong traders get in, yada, yada. Highest volume of the day, the last 15 minutes as well. So a lot of money exchanging hands. I mean, that is extreme volume in the last 15 minutes here at gold. I think that's the most volume we've had in 15 minutes in like a week at least. So all of those things are indications of me that level is going to most likely hold. Oil coming down out of the high. See if I get filled on that. These positions might fill. Got 15 minutes left here. Full, Sam. Full. Oh my goodness. Get up to that 83 level I mentioned here in ES. Now, here's the other thing that I think about. Like, when these lows are finally made, is the answer even to short it, or is it really just to get long?
Right. Yeah, we have the magic box a little bit lower here that somebody's asking about in the chat. Yes, that is in fact the V range magic box. So it'd be the extreme based on today's V range.
All right. It's your 82 half 83 level. There, the ES, 25 minutes out of the low. This is the 5th 5-minute bar in the ES. So we're going to see sellers that should start coming in around here. Otherwise, we're going to break up, I think, to like 93s. Would be my anticipation if we don't sell from here.
Oh, do I reoffer here is the question.
I got my limits. I'm just going to wait. I'll be waiting.
I just feel like if I reoffer 940s, it's going to punch back up to 29.
Yeah, I think we're going to do a little shaking and baking until we come out of the second half of lunch. I mean, what a puke we've had here the first part of the day. I don't expect a continuation to the downside here during the lunch time frame. I bet we trade up into resistance, trade lower, maybe squeeze one more new pop in between 130 to 2, and then roll over back to near lows and in the close, if I were to guess. But like, I just don't know if we have enough selling pressure to continue like aggressive new lows until we get past 130. So if you are taking a short here, keep that in mind. Just give me that entry, homie. I'm going to be sitting here with this order at 80. My order is now 28,982. It'll trade. It'll trade today. I just don't know when. Key is to be patient. who got 100 points or more on that short. Give me a round of applause for yourself.
Yeah, it definitely could have been a nice day for some people. Oh, look, 940 short. If they tried to bait me into, it might actually work.
Yo, I'm just not gonna long here.
Now, let's see.
Nice rejection though. I mean, it might get us like once again extremely aggressive there in the NQ.
Nick, are those ticks? What are you referring to? Talking about my chart, it's volume based. Sorry, these are volume based candles, is what I meant to say. Maybe a 500 volume, not ticks.
All right, what is on? I would tell you what though, guys, copper, man, this thing is still zipping. I know they were talking about it this morning, and I think Tracy was all over that one for the last few weeks, apparently. But I think it's still on my bull stand. Just strong like an ox. No fear. No fear. Alrighty. Remember, guys, 28,720s take the trades here today, and 73.28s in the ES. Mark those levels on your chart. Set an alert. That's going to be.
Hey, guys.
Hey,
Gosh,
Jim.
already.
Yeah, went by fast.
Time flies when you're doing good.
Well, I'm just trying. I missed my entry in the NQ by 2 ticks in a limit order on the high today. So I have just been moving orders down since then and have not gotten in. But
yeah, no, I heard that when you said that earlier. I know it could be a little irritating.
Yeah, but I didn't want to, overtrade myself to the downside here. But I have had orders all the way down. Just haven't got a retracement high enough to fill it. But that's all right. I'll get it eventually.
Well, remember what Pax always says: the joy of missing out.
It's a good one.
It is a good one. All right, so it looks like you got a couple things cooking still. You're just going to kind of keep them going exactly as is, go throughout the afternoon?
I'm going to keep those as is. Those orders will automatically adjust, actually, if we make new lows or highs, meaning like if the NQ makes a new low, that order will move down, and if the oil market makes a new high, that order will move up, but otherwise it'll be there.
Awesome. Fantastic. Nick, how about you? What's your game plan?
Yeah, I'm going to continue to watch this magic box down here to see if we get any sort of reaction. I kind of wish I was sitting in that 940 short, but how do you trust sellers after 30% straight to the upside when we're already down almost 2% on the day? It's like, how do I short here? It's just hard to bring myself to do it. So hopefully we can get something else off this gray box, or we're just going to continue to go lower. ES is nowhere near as much downside as NQ has had. So maybe some opportunity there too.
Yeah, a little divergence. I like it. All right. Well, great job as usual, fellas, this morning. Let's give these guys a round of applause, please. And Nick, if you could remind me what day it is.
It is Tuesday, Jim. It is Tuesday. I know. It feels like we've run marathons this week.
Thanks for the assist. Yeah, no, I'm seeing those guys. I'm seeing Stowe's band this weekend, by the way. I'm going
Nice.
Friday. Pittsburgh, baby. Go to a baseball game, and then we're going to Stowe's fest. He's one of the headliners at a concert that includes bands such as I Am the Lizard Queen, Bottle Rat, F Yeah Dinosaurs, Bastard Bearded Irishman, The Filthy Lowdown, and then Stowe's very own Night Marathons. It's going to be awesome.
Sounds like a bunch of great bands.
It's, it's going to be good. Hope it doesn't rain because it's outside. In any event, appreciate you guys as usual. And this afternoon, I think, Nick, are you back?
I am not, but
You're
there's a
not.
good
All right.
crew this afternoon.
Yeah. Okay. So XY, Selma, Kane, and Leo are coming back this afternoon. Trade the close. Don't forget 2:00 start with Shy. We're also doing, before you guys go, we're also doing another spin session. And in the afternoon, so only 300 likes, 800 views. We'll spin again. If you enter, you'll have an opportunity this afternoon to enter if you're in the chat, and then you'll be able to, if you're a winner, you'll be able to spin that wheel. So it'll be a lot of fun. Hopefully, we'll see you guys this afternoon too. All right, all right. Having said all that, thank you, gentlemen. I'm going to do an edge report, and then we're going to break for lunch. I'll talk to you soon.
Later.
Thanks, guys. Thanks, Jim.
Oh, wait a second. I might not have my screen set up. Hang on, everybody. Bear with me, everybody. We are going to pull it up. Mission control. I'm woefully unprepared right now, but this will just take a second. Boom. All right. You guys should be able to see me now. There we go. All right, let's start out with the E-mini S&P today. This is super, super interesting. You know, Nick just alluded to it as well. And I just want to pull up an intraday chart. We have a big red candle on the day for sure. But one of the things that's super, again, I talk about this all the time. I know I have a lot of lines on my chart, and I know that all of them have different levels of importance depending on where we're at in the day. Look at the bottom of the chart, though. There's that orange line there that says 1 day min. 1 day min. And sure enough, we wicked all the way to it. Remember, on big move days, that 1 day min and 1 day max are a really important area of interest. This one happens to be pretty close to that S2 level. I'm sorry. You know, they're about four handles apart, but close enough for this whole area to be of interest. And sure enough, we wicked through it not once, not twice. We might test it again. Who knows? So this is a MenthorQ Pro proprietary indicator. It's a volatility indicator that helps set daily price ranges. The 1 day min, that's what we're talking about. This is the minimum price move that, according to the indicator, could be expected for the next day. So it's generated at the close yesterday, and then it projects what the next day is likely to happen. Now, it doesn't always get there, and it's not always perfect, but it is an area of interest, especially when things move in a bigger degree, like we saw today. So we saw it here in the E-mini S&P, and now we're kind of, again, tapping against it as well. So again, it could act as support, it could act as a place to enter, it could act as a place to exit. So these 1 day mins are pretty cool on days like today. I just wanted to point that out. We are way, way below VWAP, by the way, on this thing, and I'm not interested in hitting the buy button today. We could have more continuation selling going forward here. Let's pivot over to the 30-year Treasury bonds really quickly here while we have a couple minutes left and see where price is right now. Oh, look at that. 1 day min. Again, 12 in 30 seconds. And this was a pretty decent move right down. We started this morning at 113 even. And so we went about more than half a handle. And it was just kind of a steady flow. Middle of the morning, we kind of went sideways for a while after that London IB shuffle there. And then we kind of sold off nicely to the lows that we're seeing right now. And there's volume accumulating down here as well. So I'm not so keen that we're going to see another drive up to the point of control today in a 30-year Treasury bonds. I'm thinking best case, we maybe get a little VWAP touch here, but right now it's looking pretty negative as well. And if you kind of toggle back to a daily chart, remember, I got this area support down here at 112 even, and in that area there, below that, 111 handle, I'm going to start getting interested. We're above that 5% yield right now, which, I don't know how good or bad that is, but last time it's way above, this morning was 5.004. It's a lot higher now. as well. So keep an eye on that. I don't think the bottom is in yet. I'm not ready to hit the buy button, but I do have my radar screen on. That is this morning's Edge Report. Appreciate everybody being here with us at NinjaTrader Live. We had a great show this morning. Looking for a great show this afternoon. Thanks everybody for participating all across the board. Everybody listening, everybody in the chat. Best chat community period, hands down. Best community period, hands down. So thank you for that. And looking for. Oh, wait, one more thing. One more thing before you go. Don't forget the Arena Challenge. Let's talk about the Arena Challenge. It's not too late to register. Throw in a link real fast, Mission Control, if you haven't already. This is right around the corner. There's 3 qualifying rounds and a final round, $250,000 in cash prizes, which are going to be distributed throughout all 4 of these events. May 19th, May 26th, and then June 2nd. Only register for one of the qualifiers, though, folks. Don't register for 2 of them or 3 of them. And then get in there. It's fun. Real-time, simulated live NinjaTrader platform, whichever one you want to use. And it's a great way to experience the platform and get involved with some emotional excitement attached to it as well. So hopefully you'll consider doing that. We're looking forward to it. I can't wait for next week. All right. Now it's time for lunch, everybody. Thanks for being here. Appreciate you. Have a nice, relaxing lunch, and we will see you this afternoon.